Good afternoon. Hello, everybody. It's Big Cheds. It's November 1st, 2022. This is going to be a replay of the Twitter Spaces conversation I had just a few days ago. If you're not sure what these are, if you go to my YouTube channel, Ched's Trading, check out that playlist, Twitter Spaces. I now have 17. This will be number 18. I think I might have missed one that I'll need to recategorize, but I have at least 18 conversations. They run, 1 to 2 hours, and it's me just talking to you folks, answering your questions, and I learn a lot from you, and so that's what this is. This is just essentially going to be a replay. I'm going to be hanging out here in the chat room, so that's the deal. So let's get this going, and here we go. Happy day o'clock here on Saturday, 29th day of October, 2022. I want to say a heartfelt thank you to everybody who's joining me, who will be joining me, everybody listening to the replay. I'm Big Cheds. I'm a chart analyst, chart helper, newbie helper, chart guy, trader, educator, author. Find me on Twitter at Big Cheds. I am a founding analyst at Bitcoin Live. Bitcoin Live is the best and a team in the world of Bitcoin analysts, of crypto analysts. I've been doing market updates there for over 4 years. Find more information about that in my bio. I'm also going to attach a tweet, which has like a link. You can watch one of my sample videos from back in May. I'm the author of Trading Wisdom. That's available on Amazon in 4 formats: Kindle, hardcover, paperback, audiobook. Check out the reviews. The book is done really well, and I thank you. And I'm just happy that it's done well and people enjoy it. I have another book coming, Trading Quotes. One quote for every day in the year, thoughtful quotes to help you get in the right trading mindset. And then I do reviews of my favorite quotes. That's coming out before Thanksgiving. I thought I was ready, but I got to put some more work into it. I want to keep refining it. But Trading Wisdom, the second book. My first book was a cancer memoir. I'm a lymphoma survivor, and one of my family members had cancer. So I was also a caregiver. I wrote a memoir about that. I want to give you that book for free. So just, reach out to me somehow, get me your email, and I'll just send you that book. My second book was Trading Wisdom. There's also a free version of Trading Wisdom on my YouTube channel, Ched's Trading. So this replay, well, it's not a replay. It's live right now, but it will be a replay. I'm going to upload it to my YouTube channel in the playlist, Twitter Spaces. This is conversation number 18. I go about an hour to 2 hours. I take pretty much any question. It's just random questions from random folks. And if you're a new trader trying to learn, this is a great opportunity for you. Come up, ask your question. So far, just one person who is requested to speak. It's a returning a voice. So I recognize their profile. Hit that button in the bottom left where it says, like request to speak. I want to get a whole bunch of people waiting. I'm going to bring you in 3 at a time, and then once at a time, we'll unmute you and I'll just take your questions. So while we wait for the room to fill up and while I wait for your requests to fill up, again, hit that button. We're not doing anything until more of you request to speak. I'm going to start to attach some tweets to this spaces. So we're going to have about a minute here while I get ready and while I wait for you folks to step up. Okay, attach this tweet. So I just attached a link to my May 4th video so you can see what Bitcoin Live is all about. I'm going to attach a tweet, which are my textbook recommendations. That's a very helpful one. People want to know, what do you recommend? I'm attaching that tweet. I'm going to attach a link to my YouTube channel. That would be, so just at the top of the spaces, it should give you links. It should show you kind of, let's see, continue. Here we go. Consider. It says, please consider subscribing. That's what I'd request to you. All right. And then the last tweet will be just my pinned tweet, which has info about the book, yada, yada, yada. That is attached. All right. So right now, if you look at the top of the spaces, by the way, just 90 folks, this will definitely build up. And again, I need more of you who want to speak. There's no way there's only one question in this room with 90 people. Like, are you all trading masters? Are you all like, why aren't you giving the space, right? If you don't have any questions, you should be the one up here doing the spaces, and I should be asking you questions. So listen, I want to see You folks, this is to my students who are listening. I want to see you hit that button to request to speak. Right? Lazy student asks no questions. So don't be a lazy student. I want you to step up and request to speak. We're going to need more folks before we get this conversation going. So far, it is just Mahir. He's going to be first. But we're going to wait, folks. We're going to wait all day if we have to. Hit that button in the bottom left. That will allow you to join the conversation. And I'm going to send out a tweet encouraging people to join as well. Copy link, join, and ask questions. This is your chance. BTC, and there we go. All right, what a great space is so far. It's just me asking you to talk. But these are amazing. Again, I love these. These are just a great body of work. Now we have folks. Now I'm going to start to bring you folks up. Please wait until I unmute you, or I ask you to unmute. Mahir, Congo, you can wait, Dr. Congo. Mahir, why don't you go first? Mahir, it's good to see you, man.
Good to see you again. I'm doing well. How are you?
Good, man. How you been trading?
Things are going well. I'm thinking a little bit more long term now, and I had two questions, and I really follow what you say trading wise religiously. Like you're my number one guy.
I appreciate that, but I'm just one guy. There's a good team out there. So there's good folks.
Yeah,
you
but
know?
you're one of the ones that we can really trust you. That's the thing about you.
Yeah, I'm not trying to sell you a story. I'm telling you exactly what I think.
Exactly. So anyway, my two questions are: what's with? So I noticed something when Doge usually pumps, it's not a good sign
Yeah.
for Bitcoin. Why is that?
Well, so it's a little bit easier about causation and correlation. And so Doge pumps at weird times. So there's two types of, let's try to separate maybe two environments in which Doge is pumping, okay? Let's do scenario one where it's a natural evolution of money flows. Let's say back in November of 2021, Bitcoin into Ethereum and then Ethereum into altcoins, right? So if it's Dogecoin's pumping because XVG is also pumping because TRX is also pumping, then that's one thing. You see what I'm saying? That's different than Doge is pumping now because people think he's going to integrate it with Twitter, right? And it's singularly pumping, kind of absent. It has relative strength, right? Pumping with and without relative strength. So you want to kind of look at, is Doge pumping because everything else is pumping, or Doge pumping because of something else, right? So let's separate those two. Are you with me so far?
Yeah, I'm following along.
So the latter scenario right now, where it's pumping, on its own, is the most dangerous and most unpredictable, because we don't know how strong this pump is, right? It could be like a ridiculous move that we can't even fathom, or like the top could be in, an hour ago. I don't know, but but when it's pumping with the rest of the market, you expect it's just going to fail sooner or later, right? This type of a pump has a chance to do something ridiculous, so you have
For
it's a
the
little bit more
market or for
dangerous.
Doge? For the
Doge,
market or Doge?
the
Doge alone.
Doge, yeah, because when
Yeah,
it's
yeah.
pumping on its own, and there's this this is a little bit more dangerous, a little bit more unpredictable than in the other scenario. That's the point I want to try to make.
Right. And the other question that I had, so bottom wise, I know you're one of the traders that still you don't believe that bottom is in yet.
I don't know if it's in yet. I don't know that it's not in, but I don't, like, it's just still unknown. It's still unknown, right?
So we're kind of like in a gray area right now, you would say.
Yeah, so a couple things. I would have honestly expected us to break down already, and I've tweeted that, so I've been pretty clear about that. This is ridiculous. We're going sideways 130 days. It's kind of nuts. After we recovered from the June low, and then especially after we had the rising wedge breakdown, like whatever, a month later, I think it was 25K. Like after that, I thought within a couple weeks we would be below 17K, and like that didn't happen. So I thought we would have already broken down. We didn't. We also haven't really broken out. We haven't done anything. We're flat. So it's like a 60-40 thing for, like, bears have the edge 60-40, but I'm ready to go long if like 22K's flipped, if 25.5's flipped. Like there's things that will allow me to capture a move up. But I'm not going to be premature. I'm not going to mess around kind of in between the bottom, and the top of this channel.
Right. Yeah, I totally respect that. And these were my two questions, honestly. Thank you for everything.
Thanks for stepping up, man. I hope you do well, okay?
Thank you.
Now
Appreciate
we have it going. Thank you, brother. Now we have it going. We have people requesting. It's about you. It's not about me. It's about your questions. Charlton, you want to go? Chaitanya.
Hi, Chairs.
What's up, bud?
Yeah. Tomorrow is the Fed meeting.
The what?
And
Okay.
tomorrow, next week is the Fed meeting.
All right.
So, what do you think will be the relationship with the Bitcoin movement?
No idea. Why does it matter? Why would we care about it now? Like, if it matter, hey, hold on a second, please. Supply shock. You need to wait for me to ask you to unmute. So just do me a favor. If I mute you, I want you to not hit that button. So Chaitanya, um,
Yeah, yeah,
I got to remove your supply shock. You need to fix your audio, folks. Give Twitter access to your microphone. When it's your turn, I'm going to bring you up and call your name. So please don't mute yourself. So Chaitanya, yeah, I mean, Fed meeting is coming Wednesday. Here's the thing, right? How do we know that like they're going to say anything that's going to move the market, right? If it moves the market, then we can just use that new information and change our game plan with Bitcoin. But like ahead of time, we don't know what they're going to say. We don't know if what they're going to say will matter. So what does it matter? What's the point in over speculating ahead of time, right? The only thing we can do is just stay glued to what the price is telling us in terms of levels to watch in support and resistance. All right, does that make sense? Chaitanya, you can unmute.
yeah.
Does that
That's
make
like
sense what I'm
quite.
saying, buddy?
Yeah. That's it.
I
That's it.
mean, like, I understand the urge to want to speculate, right? And that's like you want to try to feel like you're in control, like you want to try to get ahead of whatever's going to happen, right? But there's no way to
Yeah,
do that. There's no way to do that. And when you start to focus on down the road, a week out, or you take your eye off what's going on right now, and you always have to be watching right now in the chart, if that makes sense.
yeah. You're true.
All right. Hey, have you seen my
Yeah,
YouTube videos yet? Have you watched my YouTube channel and seen all my videos?
yeah. I'm a premium subscriber of your Bitcoin Live also.
Oh, well then you're on the right
Yeah,
track, brother. You'll see me
yeah.
tomorrow night for the report, okay?
Okay, okay. Thank
Good
you.
to see you, man. Thank you so much.
Bye. Yeah.
All right, folks, hit that button in the bottom left. I want to hear from you. I want to hear questions, comments, feedback. This is we're hanging out on a Saturday. There's no real agenda. I don't know how long I'm going to go, but I'll only go as long as there are questions. So hit that button. Don't be shy. You can add to the conversation. You can add value. Whatever your question is, whatever you're thinking, whatever you're going through, chances are someone else listening is going through that and dealing with that. So, Dr. Congo, thanks for being patient. We'd love to hear your comments next.
Yeah. Hey, Chad, how you doing?
I'm doing good, man. It's a beautiful day.
Yeah, I think so too. And to be honest, I don't have a question. I just wanted to thank you again for sharing your knowledge, and maybe for the people who joined this space and don't know you for a long time. This man really is most times spot on. So
Oh, you're kind.
nice content.
Listen, it's all about you folks. Like it's just I want to get better, and you have to keep practicing. But we're all like kind of in this together, and we always have been. And
Yep.
I'm just a trader like you, so it's awesome, man. Thanks for sticking around.
Yeah.
All right. So what
You,
about
man.
you? What are you doing here? Are you kind of sitting on your hands? Or are you trying to trade some of this lower time frame movement?
Me?
Yeah.
To be honest, now I'm not trading right now. I'm more or less waiting for 22.5 to that we break through it, and
Right.
then I guess I will reevaluate. To be honest.
So what about altcoins? Are you doing anything with altcoins? Or are you just waiting to see what Bitcoin does?
Yeah, I'm waiting for Bitcoin, to be honest, and then I am maybe keen to put some money into altcoins, of course. Yeah.
All right.
Yeah.
All right. Well, I hope you do well, brother. All right.
Yeah. Thank you too.
Take care, man. Thank you so much. All right. Let's go. Next up, it would be Jeremy. I think we've talked to you before.
Yeah, what's up, Ches? How you doing?
Good, bud. How's your how was your week?
Pretty good. I just wanted to. I got a quick question for you. I want your opinion on quant or QNT.
It's a real
I
nice
know we
chart.
had
Yeah.
the inverse head and shoulders. I know it's pretty high
Definitely.
probability. I'm not too worried about it's continuing up, but I was wondering what
Okay.
you think like a time frame up or a time frame would be. Getting a little impatient.
Well, yes, time frame is one thing, but I think more important than time frame is like when are you going to abandon? Like if that starts to break down, I'm curious, and I have a level in mind because I actually looked at this earlier. But if you think it's a head and shoulders, where are you going to start to get worried, right? Like how are you drawing your neckline on that? Like where's your neckline
I
with
think
that?
it's
Like
like
you can see,
140.
yeah, like 140, 130, 140. So that's fair enough, right? So, here's the thing with the head and shoulders. You're seeing these just three thrusts, right? One low, a lower low, and then a higher low. It's pretty easy to identify, but you don't always have a really clean trigger level, right? So, like when a head and shoulders is forming, you have to look at where you're going to execute that theory, i.e., go long if you think it's going to, complete, or really confirm rather, or where does it invalidate? And that would be when the right shoulder fails. So you have to always look at those two things. If this is a head and shoulders, here's where it confirms, here's where it invalidates. In this situation, you're already confirming, you're already above the neckline, right? Now, when you're above a neckline, now what's the next step? You want to say, all right, where do I want to buy? Did I miss it, right? I still like it, but did I miss it? So you want to wait for a retest of the neckline. So if you're a bull and that's your theory, you're looking to buy it in 130 to 140 range. So those are my first initial thoughts on that. In terms of time frame, um, in terms of what, until you want some profit or until you would want like the full measured move, meaning the height from the head, to the neckline. For me, just like any loving is good loving, any profit, good profit. So if I can get it to go, because here's the problem, you may have another congestion or consolidation pattern just above that head and shoulders, which will be in the way from it completing its full target. And I think something a lot of people do, newer technicians, is to look at like a bull flag, and they'll say, okay, the bull flag's breaking out, therefore it's going to go to this next height. Let's take the height of the flagpole and say, well, here's the move, and now it's going to go from 100 to 180. Okay, but if there's a big congestion pattern at like 140 from prior price action, right, like a prior support that broke down, and now you're rallying, you're doing a bull flag, like it's not just going to break through that. You have to always pay attention to what I would refer to as obstacles in the way of a measured move. So time is one thing, but I don't think like time should be one of the lesser things you are focusing on when you're managing this trade. Does that make sense?
Yeah, it does. I broke my 25% rule and have too much in it and just getting like impatient. I'm still in profit, but
Well,
like
what
I don't want to quit.
you gotta immediately remedy that. The minute you look, here's the rule of thumb. If you enter something and you're uncomfortable, that means you have too much money in it. Like that's a 10 out of 10 rule, right? And if you're ever in that situation, you got to find a way to get back into control. Right? You
Okay.
don't feel in control now. You got to immediately remedy that. Even if it means cutting your position in half, do it. Like just whatever that number is, get back in control. You have to find a way to be in control. If you don't have control of your trade, you have nothing.
All right.
All right, brother?
Much appreciated. Thanks.
I'm glad you joined. It's all about you folks, your comments. You can just hear me speak all the time. If you want that, go to my YouTube channel. But this is about being interactive. Good to see some folks who are listening, common listeners. Reggie, it is your time, Reggie. What would you like to say to the group today? You can just unmute yourself, Reggie. Make sure Twitter has access to your microphone while we're waiting, folks. If you want to talk, just step up, hit that button on the bottom left, which is a request to speak. What's up, Reggie?
Hello, Chad. Are you hear me?
I can hear you loud and clear today.
Yeah. So I want to say big thank you to you because you basically cure my PTSD from trading,
Oh,
and your book was great.
oh, good. Thank you.
Psychological approach and stuff.
Yeah, yeah.
Since March, I was pound averaging into the dollar, so that's the big win for starters. And I've been trading with this on spot. To be honest with you, over 10 trades, one lost because I go back to the leverage one, and that was a mistake. So it's staying with this. What I'm doing. So yeah, I'm pretty happy, and you bring into my life quite a lot.
Well, listen, I'm happy that you're here with us today. You're sharing your experience. Not that I'm not still learning, but I am a teacher, and teachers need good students, and we work together. I can learn from you. So you're adding value to this conversation, and thank you for that.
I don't think you ever stop learning. That's every day is a school day.
Know it. You know it, brother. That's right.
Yeah, no. I think we spoke in March, beginning of this year. I spoke with you on Telegram,
I'm
and
not
I
on
think
Telegram.
You
That's
know?
a scam. Nope, that's probably a scammer. That's one thing you have to know.
All right,
No,
all
it's
right,
not
all
me.
right, all
Be
right.
careful out there.
Good,
I'm on Twitter.
good.
I'm on Twitter, YouTube, and Bitcoin Live. Nowhere else. All right, be careful,
Yeah, I
folks.
almost be about to delete Telegram off my phone because it's too
All right.
much hassle there.
Any questions
Um,
before we go, brother? Anything questions today? Question.
I like to listen because I like to learn. I don't think I'm
Good.
yeah, basically I have my plan to what to do, and if a chart doesn't draw my patterns, I'm sitting on my hands. Your book, and you taught me actually some yeah, I can resist.
Good.
I'm not greedy. It brings so
Good.
much to my life. And I'm implementing into rest of my life, to be honest, all the aspects, because apart from doing this, I have perfect position because I have steady income, but I paid with my health for this. So and my multiple sclerosis not always let me put as much work I will love to do.
Yes.
But honestly, that's a big respect for the book, and I wish that everyone just listen to chat and take your own, get your lessons, and implement it, and let's go. Thank
Well,
you.
listen, I wish you strength. I wish you good health, good luck, and just
Thank you very much.
take care.
And I have to say, like, the reason I started reading the book because you fought your cancer as your first book.
Yes, sir.
Yes, and my mama, she's a brave person. Like, she had a cancer, and we 3,000 miles away from each other, and I never knew, and she fought the battle himself, without telling me anything, because she knew I'm having this bloody disease, and she didn't want to add on top of it. So you are kind of
Well,
a
we're
hero
more
to
alike
me.
than you know.
Thank you very
We
much.
are.
I wish
I thank
everyone
you.
the best.
Take care. Take good care of yourself. Let's just take a minute there. Let's take a moment. All right. That's just why I enjoy listening and connecting with you folks. Nick, thank you for being patient, Nick. And the folks who are requesting to speak, I will get to you. Just please be patient. Nick, good to see you again. How you been, buddy?
Yeah, long time. Good to be back.
Yeah. What's going on?
Just to ask you about the 21,000 level on Bitcoin at the moment. It seems to be being pounded a bit, tested twice, I think, in the last 36 hours. What do you see happening? Do you think we're going to see that breakthrough? And then what do you think the next key levels will be to look at?
So I actually don't even for me, I don't even think 21K is a level.
Is it?
I'm not impressed with these levels here. 20.5, 21K. It's a chop zone. There's a reason I'm avoiding trading it, because it's not that well formed. This is a sideways channel with a defined upper boundary at 22.5K and a lower boundary, basically, 17.6 to 18K. There are trades within that. Those are lesser quality trades. We're in a sideways trading environment. All the tools of classical charting teach you that you need a trending market. Sideways markets are the hardest to trade in. All the moving averages are sideways. It's ridiculous right now. So like when 21K is not a level, that's like a low time frame gambler's level. And maybe there's better traders than me out there. There are many of them, and they go trade it and do well and laugh at me and say I'm too conservative. That's fine. But like the price has to define a level. The more well defined a level is for you, the easier it is for you to know when that idea fails. So is 21.5 the level? Is it 21? Is it 25? Is it 20.5? I mean, just got to step back. Sometimes you got to step back, and there is not a good trade. And I think this is one of those moments. That's what I think.
And just one last thing, for the monthly, it looks like the monthly is going to close on a green engulfing candle.
Let me go look at it. I don't look at monthly. I feel like monthly is too young a chart in Bitcoin. It doesn't have an MA200 yet. But let's take a look at it. Monthly. Yeah. Okay. Well,
so
it's all right.
What do you think what does that say for the next month?
Nothing really. I mean, it's a good month. It maybe it would suggest you get a bounce towards the MA50 there. What is that, 22K? And that wouldn't be unreasonable, but it's not. Engulfing candle. It's a few things in an engulfing candle. We don't have the gap open and close like you'd see with equities. So you don't. So it's a little bit different in the ability to truly engulf. But the two things we can apply to crypto from candlestick theory in this regard is that the engulfing candle needs to engulf the prior candle. Like it should be at least 1.5 times, if not twice, the size of that prior candle. Right? You want to really the concept is you're engulfing. You're completely wrapping around that prior force. So I see people doing these, tweeting out, oh, look, it's an engulfing candle. And it's like 10% bigger, 20% bigger. Like that doesn't cut it. All right. Number one. Number two, the volume. You'd actually want much more volume on the second candle to show the engulfing momentum, right? Every candlestick signal is the strength of every candlestick signal is based on the volume behind it. So that's other context. So it's like, yes, it's an engulfing. And then the next question is like, how strong is that engulfing signal? So it's not always like, it's not like 1 or 0 on off. It's engulfing or it's not engulfing. It's like the strength of the signal. So yeah, it's engulfing, but it's not a bad candle, but it's not going to make me buy. I'm not buying based on that candle. It's certainly not. All right.
Okay. Well, thanks, Chad.
Thanks, buddy. Thanks for
Appreciate
stepping
you.
up. Appreciate you, Oliver.
Cool,
It's
man.
good to thank you, man. Oliver, good to see you. Chart, I'll get to you next. I'm skipped you, I think. But Oliver, what's going on, Oliver? What would you like to say? And give you just a moment, folks, just a quick reset on Big Cheds on Twitter. You definitely want to check out my YouTube channel. I have tons of free resources, learning videos. They're all linked here at the top of the spaces. What's up, Oliver?
Hey, Chats. Always want to thank you for your content and your time. Definitely a strong follower of yours for sure.
Nice, man. How are you doing out there? How's your trading going? What's going on?
It's going. I'm being patient, being as patient as I can, for sure.
Yeah.
I asked you about Matic a couple of weeks ago. Kind of talked about it
on the Spaces or in Twitter or what?
On Spaces, I asked. Yeah, on Spaces, I asked.
Okay.
One of the Spaces. I think that was the first time I got on. So you gave some feedback there. I also track Uniswap quite a lot in Aave. And it sounds like this week, I've been kind of continuing to look at the daily Bollinger Band. Also, there was like an opportunity there for a potential short on Uniswap this week on the bearish divergence. Just kind of wanted to hear your thoughts a little bit. Like it sounds because you had commented a little bit. So it sounded like, hey, you were looking at it. Maybe you were considering a short. Did you kind of back off and you're just kind of saying, hey, I'm going to reset, kind of be patient, and if I see that pattern again?
So let's talk about Uni, and that might be best to kind of illustrate what you're talking about. We're in a channel where you've got to be quite nimble. I'm on my phone. I'm trying to get the chart up, and it's being goofy here, but there we go. So Uni had I don't remember when it was, but Uni had like a 10 out of 10 short signal back at early October, and I took it. And you had a beautiful move upper to lower Bollinger. It went like 7 down to like 560. I mean, that's ridiculous. So, but after that, you had another short signal. Let's say if you have the chart in front of you, look at like that spinning top on October 19th, and the kind of MA 200 underside.
Okay.
Like that's decent too there. And then you get the up thrust, how it goes below the prior candle. So that's pretty good too. And so you had, from there 670 down to, 590, but it's not as high quality as what you just had because you had that really strong advance into it, right? Like the stronger the move into the pivot, the kind of the better an opportunity it is, right? And that's why you see kind of the almost the elasticity of the move, where it moves all the way back down. And I'm sure Elliott wave, theorists can, so whatever ABCD or whatever they call it, because I'm not one of those guys, but you can see that it was at the upper Bollinger as well, right? It was also at the upper Bollinger, and it had the outside bar, right? So, and it was an up thrust to the prior horizontal back, September 12th. So that's just a little bit technical, but it was a better setup. So you get like gradations of steps, and it's almost like if you think about across a lake, and it's like the first bounce that stone's going to make is maybe the best. It's going to be the best bounce, and then each time it comes back, it's going to try to bounce again. But is this the time it doesn't bounce? You know what I mean? So it's the idea with time frames too, because if we're looking at this gyration or movement on the daily chart, if you zoomed out, it'd be something different in the weekly. it would just seem like a little consolidation. So, this is trading within a range, and generally, in my opinion, is to wait for those better setups like that first one rather than the second one. Wait for the grade A stuff.
Right.
Especially in a sideways range. But
yeah.
bottoming here. It also has kind of an inverted head and shoulders, and it's right at the peak. The neckline right here, right around 7. So, it's at least something's happening. It's been pretty boring for a while, and certain things are starting to get a little bit more interesting.
Right. Good timing in your spaces.
Thanks, man.
I appreciate the feedback. Thanks a lot, Chad.
Have a good one. Thank you so much. Let's go chart striker. Sorry, I skipped over you before.
It's okay, no problem, Chad. Hi again.
Hello.
Hello. We spoke last time, I think about a week ago. I had a question about the hammer and the Bollinger Band.
Good. I remember the voice.
Thank you. Yeah. I hope you're doing fine, and thank you for creating another space for people to learn.
Thank you.
I had a question about FUD versus technical analysis, okay? Or FOMO, sorry. FOMO versus technical analysis.
Oh,
sorry.
Okay. That's a little bit different. Okay.
Yeah. So look, for example, Dodge was showing, resistance on the short term when it came to yesterday. I have the charts in front of me, but I was wrong, because I do also have a channel where I teach people as much as I can from my experience.
Good.
So I was wrong about levels and so on. And I noticed that even though maybe candlesticks and other signals are telling us, when coming to tools, telling us that a pullback is like around the corner, it really doesn't beat the FUD, the FOMO that is going on. For example, right now too, we are showing a shooting star on the hourly, and I think a doji.
Okay.
And on the 4 hourly, we have another signal, another candle line telling us, pullback is due. But do you think that FOMO is gonna beat the technical analysis at this point? Like, how do you weigh it up?
So those are like different things. It's like I'm trying to think of an analogy, a better analogy. I don't know if I need one. Like, the technical analysis tells you how to deal with the FOMO. Like, FOMO is what the rest of the market is doing. It's not about what you're doing. Like, you know the chart, you know where the trend's that you had a bounce into a resistance area, like whatever, 8.6 cents. And so what TA tells you is, I'm going to pay close attention to that level. And if it fails there, I'm going to short it. If it breaks through, I'm going to go long, because now I have a very clear level to identify as, where my trade is right or wrong. And my trade is right above that level, it's wrong below it, right? TA, everyone else FOMO is great, because now you're long and let them drag your position up to a great winner or whatever. 1 hour chart, you look at the 1 hour chart, right? So Japanese candlestick signals are all short-term signals. So all that might mean is a reversion back to the moving average, which in this case would be EMA 8, which is where it has been bouncing in the past. And that would just mean like 12.5 cents. It doesn't mean the broader move fails. It's just a lower consolidation. So FOMO is different. Like, FOMO is like describing is a sentiment read on the market. Your TA will tell you how to handle the FOMO of the market. It's not one or the other. You know what I mean? It's not one or the other.
Yeah. Okay, I got it. Thank you for explaining that too.
So listen, there's a difference between FOMO and you feeling FOMO. Because I don't know if I'm hearing that in your voice, or I'm hearing a little bit where you feel like you got caught off guard.
I don't have any. No, I don't have any FOMO, because I went out a bit earlier. But the fact that I kind of noticed that, okay, even though candlesticks are telling us something else, the FOMO is beating it right now.
No.
So
but think about candlesticks and time frames again. The candlesticks just in the 1 hour are just for trading within the uptrend. It's not for, unless you're talking about a daily candlestick might mean something here, but not 1 hour. It's just a pure acceleration right now.
Sorry. sorry, I was also looking at the 4 hourly. If you
Yeah.
see, like, I saw it a few hours ago, I think 2 hours ago or
Yeah.
something, and I did see like there was some type of, signal when it comes to the candlesticks, like a pullback is due. But then I was like, well, if people are worried about, well, not worried, like excited to hear something from Elon, for example, then it's probably not gonna come down and beat that, coming resistance, because we
Too
might
much. You're
reverse at
doing
the
too much. You're doing
17.6.
too much thinking. You're doing way too much thinking.
Okay.
You've
Okay.
got to step
Okay.
back and understand every trend must consolidate. And
Yeah.
we will not know the structure of that consolidation. We will not know the texture of that consolidation. All we know is there's major levels to watch: rising EMA 8, the Bollinger Bands, candle construction. But you need to reserve from drawing all these conclusions. You're not required to draw a conclusion every 5 minutes. You know what I mean?
True.
Just
Yeah. True.
step back and let it play out. All right.
True. Be flexible. In other
That's the
words.
only way to do it. All right.
Okay.
Thank you.
Thank you. Thank you, Chad. Take care. Bye bye.
Talk to you next time. Next up, we have Larry Muhammad. What is up, Larry Muhammad? Folks, thank you for being patient and waiting in those requests.
Hello, Chad.
What's up, Larry? How you doing?
I'm good. How are you doing?
Good. Your name almost sounds like Larry.
Yes, I am Indian.
Good. So how can we help you today?
I love your content, man. I watch all your YouTube videos.
Oh, thank you for saying that.
My question was that market goes one way in an anticipation of an event, like upcoming event of rate hike. Market just goes up. Market is going just up and up
Yeah.
without following any uh, resistance.
Mm-hmm.
I have seen it multiple times before. The market just goes in one direction before an event.
Yeah, it's like the Ethereum merge. It's like the breakout we had from like 800, up to 2000. I mean, you're describing the buy the rumor phase, and then you have the sell the news phase. Things
Yeah,
always
but
rise in anticipation.
yes, I know. But sometimes it just goes upward and upward, or
There's,
downward and downward,
I mean,
even after the
trends
event.
tend to continue, right? Trends will usually continue, right? And so we have to just the first thing we should do is assume that whatever this is a good point, right? As a
Yes,
general
I have
rule,
seen it many
anytime you
times.
look at a chart, Larry, when you look at a chart, you should assume the chart is going to continue doing what it has been doing in the past, right? That's the first rule, right? Is just assume that if it's a downtrend, it's going to keep being a downtrend. That's like what you have to start from. That's like your starting logic point every time, right? Because trends tend to continue. But then you look at levels, which would say, okay, now where am I wrong? What would happen to make it seem like that's going to change? And that's what TA is, okay?
I know.
All right,
And
listen, look, I feel like I get that you feel like it's frustrating because it's out of control, and it is. And it's always out of control. It's not within your control. What's in your
no,
control is when you decide to apply your risk.
I follow. I follow. I also put stop loss and that, but
Yeah.
it's just before an event, things just tend to go one way only.
Yeah. Well, listen, my only advice would
Like
be, Larry, I would say if you start betting with less money, it might be easier too. Like smaller positions are a lot easier to manage. And for me, in my experience, I've found that when I'm using a smaller position, it feels easier to trade. Like for some reason, the chart, feels easier to me. Does that make sense?
I got you.
Okay, brother. Thank you for
Understand.
stepping up. Okay.
Thank you.
All right. You have a great day. Thank you so much. Next up, we have Adrian. Okay, Adrian Garda, what's going on, man? You can would love to hear you join the conversation today.
Hello, guys. Can you hear me?
Yeah, how's it going?
I'm fine, thanks. Thanks for having me. So I'm basically just here for a guess, I think.
For what?
So BTC is the de facto crypto on the market, right?
Yes.
But my opinion is, and I think I'm alone with that. So BTC is in general, in the technology perspective, it's kind of old and bad, I think, because proof of work and the slow blockchain in general, it's make this a little bit sluggish or things like that.
Right. So if
And
I understand you correctly, what you're saying is that Bitcoin's the biggest one, but it's older and there's newer stuff, and the market has continuing to evolve, and it's going to evolve, away from Bitcoin. Is that generally what?
it is that.
Okay. Okay.
What do you think about it?
I think that's fine. You could look at that perhaps as a chart of like the Bitcoin dominance chart in terms of, the amount of market share Bitcoin has. I think that's fine. I think it's an interesting conversation. I'm okay with it because I can't control it. I have nothing to, it's not something I have to accept it. It is what it is. That makes sense. But Bitcoin's the store of value because it has the scarcity. These other ones are just absolute trash, and they're not. Most of them you'll never hear of them again. And so that's like I think that's why I have zero respect for anything that's not Bitcoin. Personally, you can call me a maxi, that's fine, but I'll trade anything. But I'm not holding any of the other stuff personally, because it does for me. It's like I know it's like a penny stock where they just decided to issue more shares. They can issue as many shares as they want. It's nonsense. It's absolute nonsense. Bitcoin's, it's a store of value. So at least that I understand. But beyond that, it doesn't matter to me. I just trade the charts, and I guess that's how I would respond to that topic.
Yeah, thanks. That's what I wanted.
It's great to have you join us today. All right. Thank you so much.
Thank you very much.
All right. Let's see. I have a good friend I see somewhere in the audience. We're going to try to bring him in. In the meantime, we'll add some more guest speakers. So just kind of hang in there, folks, and we will get you in. All right. Big Jonas in the house. Nice to see you. What's going on, buddy? Thanks for stepping in.
Hey, Cheds. I was wondering, how do you take your proof of stake? How do you like it cooked?
Well, I know that I have no respect for how you have your steak cooked.
I will eat.
You're like, oh, if it bleed, like if it's anything less than medium well plus, you're pissed off.
With a side of A1 sauce, of course.
Always. So, what's the status of the market as you see it? Folks, listen. This is Big Jonas. He has a YouTube channel, Jonas Trading. He's a chart guy, just like me. He's been doing it a long time. Feel free to ask him questions. What's going on, Jonas? What are you seeing out there?
Hey, Cheds. Hey, everybody. Appreciate that. Yeah, listen. Interesting week in the market. The feeling we had kind of mid-October when we got those CPI numbers, and followed by several just beats, not necessarily bad beats, but just beats in the earnings that took some really heavyweights down like 20%. It was amazing to see in the same week almost. Facebook, Amazon, Microsoft down huge. Overnight, we're talking, well, hundreds of billions of dollars just wiped out. And a lot of people own these shares. So, little bounce back towards the end of the week there. But listen, the market it tries to forward price things, right? It's trying to look 6 months out, 9 months out, and kind of anticipate, the future, when things will turn around. And that's kind of why markets tend to bottom before the actual fixing or moving forward of the economy actually takes shape. So right now, based on what we just saw the past several weeks, like we've had, 3 weeks up in a row of the Dow and stuff kind of stabilizing, is the fact that maybe the market itself is trying to kind of work that into play. But nothing has changed. The Fed is still remain incredibly hawkish, raising 0.75 every meeting. And next week, there's kind of another one of those events, and that I think will set the stage if they hint how they want to kind of close out the year. And you tend to see them kind of hint about how they want to close out the year, might give the market a hint about how they can expect the rest of the year to play out. How that applies to crypto is really where the interesting part is. You know, we've seen Bitcoin hold this 20K range at such a so, you know, every time we dip into the teens, you know, we get stabilized and bought back up. And we've been in this trend for what, 3 months now? Now, there are two things that can really change the trend of an overall market: price and time. The price really hasn't done its job yet, but maybe the time has. And what the time has done is allowed our moving indicator, our EMAs, our MAs, certain indicators that were incredibly oversold, you know, over the big fall from, you know, 40K to 30K, and the big easy fall from 30K to 20K, 17.5, if you will, then the bounce, but still needed time to fix those spaghetti bands of MAs and EMAs. So the stability is now we have these moving averages beneath the price of Bitcoin in some time frames that can support a stabilizing zone and potentially a chance to retest those next areas of resistance, 22.5 up to $25,000. That can be achieved if the stock market continues to basically build on its potential recent W bottom bounce and grind higher into the end of the year.
Great recap, man. Yeah, I know you watch a lot of equities and you have a lot of fundamental like knowledge. So it's great to have you here. John, it's your turn, John. Thanks for being patient. Folks, just kind of ask me anything to say today. John's econ. Give you just a few moments here to hit that unmute button.
Hey, Cheds, thanks for having me on. To kind of echo what Jonas was actually just saying, I actually think that the current market environment, based off of unemployment being lower, inflation persisting, and the Fed still pretty dedicated to raising interest rates, I think this bounce is kind of a signal for the Federal Reserve to look at to increase their hawkishness until they kind of get what they want. And I'm looking at these charts and I'm seeing Bitcoin come up on, that key 20-week moving average. I'm seeing the Dow Jones hitting its 200-day moving average. We haven't been able to clearly break any of these moving averages since this bear market kind of set in. So to me, I'm thinking, this move probably won't be super sustained. I'm thinking that the increase in the hawkishness of the Fed is probably going to create more downside pressure in the near term. And by near term, I mean, 3 to 6 months or so, rather than, allowing the markets to continue to rally. So I kind of just wanted your thoughts on that. And, if this move that we're seeing is actually them pricing in a pivot, or the Fed is looking at this and probably seeing, okay, this is probably something where we have an opportunity to increase the recessionary pressure because unemployment has yet to spike, the housing market's yet to crash, et cetera.
So I think Jonas is a great topic, and I think Jonas and I might have different answers. I mean, I think about it always like this: is you have a trend, and then you have the counter trend moves, which is a relief rally. And you talked about we haven't gotten over, and then you mentioned certain levels like MA50 here or 200 there. When a relief rally starts, we take, for example, like the June 16th low on Bitcoin. Like, we don't know how strong the relief rally is going to be. We don't know how many checkpoints it's going to pass through. Right. If you think about just abstractly, if you think about like a price drop, like a quick 10% price drop, the price is below the daily lower Bollinger probably. All right. So the first relief rally is you're minimally going to at least get back to the lower Bollinger. I mean, that's what will always happen pretty much. Right. And then from there, do you have enough strength to rally to the EMA 8? Then can you close above the EMA 8? Then can you tag that middle Bollinger, usually somewhere near the EMA 34? At that point, you break through that. Now you're looking MA50s ahead. Get above the 50. If maybe the 50 is below the 200, now you're looking to clear the 200, right? So it's like you have these checkpoints in a relief rally, in a mean reversion, right? In a consolidation against the trend. And that consolidation usually leads to the trend continuing because that consolidation resets all the oscillators. It resets, the oversold, resets all the stuff people look at. And, the short-term speculators, they step out, new ones come in, everything's rebalanced. It's just how a trend works. So, are we doing this because the Fed may be pivoting? I mean, for me, that's so abstract that nobody can ever definitively answer a question like that, yes or no. For me, it's almost like, what's the point? I just think, okay, we have equities we're oversold, but so you're going to rally, and then you're going to at least have some kind of relief rally. So I just don't know, how many checkpoints it's going to clear. So I'll just kind of play the levels level to level. And that's, kind of how I would answer that.
Sure. And I guess, a follow-up question to that then is, what are you looking for as far as a counter trend rally into an actual reversal of the trend, right?
For what market? Like for what? What are you
Sure.
talking about?
So I'd say equities primarily right now, because I think that's where most people have their eyes on. But
Yep.
because, a lot of people, I think right now are saying this isn't a relief rally, this is
Yeah.
actually a reversal, right? And I have yet to
Well,
see
it's too
anything.
early. I mean, they could be right, but that's like saying it's a good movie, and we're halfway through. They're like, "This is a good movie." Yeah, but we haven't seen the whole movie yet, right? Like, okay, maybe they're right. If the movie still is good, what if the second half of the movie sucks, right?
Sure,
So
absolutely.
look, I mean, the SPY is still below it's still a daily downtrend on the SPY. I mean, that's where the relief rally stalled last time at the middle of August at the MA 200. So you're just like,
Right.
okay, boom. So, but then you clear that, and then you could be even more conservative. And not only do I need to clear the MA 200, but I need to clear where the last relief rally stalled, which is 430. If you're above 430, the bottom's in, probably.
Sure, absolutely.
And that's just how I look at it,
Gotcha. Hey,
All
well,
right.
thank you. I hope you have a great rest of your day. And
I'll
thanks for
try
doing
to,
this.
man. Thanks for stepping up. Thank you so much. And as always, if you want to say anything, just jump in like right now. What's up, bud?
Yeah, I have a few thoughts on that
Good.
as well.
Rip it. Let it rip.
All right. So listen, the notion "don't fight the Fed." Those who ignored it basically the past 10 years since the bottom of '08 when the Fed began to intervene. Um, there's been times where it's been a quick short or a quick, drop in the market, but every time it's roared back. So why is this time? Why is basically the past 6-8 months of the market um, putting in lower lows and lower highs? Why does this time feel different, and why is this time different than all the previous times that the market has basically consolidated after a big move? And really, the answer is the Fed's primary mission, which has always been low unemployment and contained inflation. And they have the low unemployment. And that's kind of the problem is what's happening is that the economy is still strong and stuff costs more because really corporations and those that are the business end of this are able to charge more because supply and demand issues, the overall sense of the economy and what things should and now can cost. And of course, energy prices play a large factor in that. Quick thought about housing. We just saw rates on a 30-year over 7, and change. In my opinion, I think 8 to 8.5 is where the housing market just completely stalls out. I think people can still handle a 7 handle on a loan because basically the thought is sometime in the future, at some point, they'll be able to refi to a lower rate. But I think when you're in the eights, which is what I remember my mom telling me about this in the early '80s, when rates for a house, our home loan was like 11%. That was normal at the moment there. But you could also get like an 8 to 9% CD in the bank for like a year or two. So that was the offset of why the rates were higher. So we're seeing this market completely transform where zero rates and being paid nothing for having your money just in cash, and it would make so much more sense to have in the stock market, is now trying to change. The reason it's changing is what the Fed is doing is the quantitative tightening and the raising of interest rates. They need to continue to raise rates to a point to basically slow down the economy more. To the thought is to bring down inflation, but this will have countervailing issues and unintended consequences because of this. And I think we really don't know which way this is going to play out. My personal thought is that we have not seen the lows yet of 2022.
How about 2024? What do those lows look like?
I don't understand why people talk about 2024. We haven't even gotten through 2023 yet. We all know what's going to happen in 2023, right? the market's going to turn around, because that's what it does, right? Now, listen, there's a notion I keep hearing about the next bull run, the next bull run. And listen, if you've been trading Bitcoin for 8 years, there's been a bull run, there's been a horrific crash, there's been some time, and then there's been another bull run. And that seems to happen roughly every 3 to 4 years. There's a cycle happening here. So it's not crazy to assume that we're just a year or two away from doing what we saw in 2020. That could still happen, and if you want to hedge your bets, there's ways to do that. But I just feel like it's just after what we went through, and still the excess money in the market. And I think Doggy Coin is a pure example of that. This is still ridiculous, but let's keep it going. So yeah, that's kind of what I'm thinking.
I mean, yeah, as long as Doggy Coin's pumping, that means there's some action in the market. Everybody, thanks for waiting. Akaminos Crypto. It's nice to have you back in the conversation. What's going on?
Hey man, nice to see you again.
Yeah.
I was thinking about what to ask you, and I thought it would be good to ask both of you. If you could choose one indicator to use for all of your trades, what would it be?
I'd probably use the Bollinger Bands. Because if you actually have a that actually Jonas and I argued about, because he doesn't like, but it says all you need to be successful is to learn how to use Japanese candlesticks and Bollinger Bands, right? Because all candlestick signals are short-term signals. They're good for kind of trading these little smaller channel moves, but like a reversal candle should be at the lower Bollinger, or ideally, right? So I would say the Bollinger Bands, because they make the candlesticks very effective. What about you, Jonas? Jonas, what about you? Your favorite indicator? If you had one indicator, he's having audio issues. So yeah, for me, it would be Bollinger Bands. I think he would probably
Here, Chance.
say.
Yeah, I think my favorite indicator is the opposite of what certain people are saying, and saying what's going to happen in the market. Jim Cramer, inverse Cramer, right? The obviousness of the populace and sentiment, not just what we feel and see on Twitter and stuff, but it's the mainstream media, talking down things for so long that the inverse of that becomes the better trade. And a lot of why this keeps happening, this ebb and flow, is because there's a lot of money on the wrong side of things at the wrong time. And a decent push can take advantage of that. So this recent rally we've had, a lot of it was kind of initially funded by short covering, and then has also kind of coincided with actual money flow into these things. But I think a lot of this could also be just people trying to prop these things higher to then sell them and get out at a higher price. We haven't changed trend yet, and there's still a lot of damage done in the market, even though we had a good week. And what we're seeing lead is the Dow stocks, and what we're seeing tail is the NASDAQ, and especially the big tech.
Jonas.
Yes.
So would you say your indicator is sentiment then? And to answer his question, concisely, right? I say Bollinger Bands. Are you saying essentially like, sentiment, people? Is that your one indicator?
So the indicators are fact. This is what the RSI is. This is what the where the EMAs are or whatever. Fine. I can't argue with that is what's happening, and therefore. But what I can feel, and my answer to you is that the sentiment tends to bring too much of the herd to one side of something. And there's also kind of a history about what we just went through. This time period in October historically is like the best as we head into like November. And then there's like a little kind of dippy do right before Thanksgiving, like a week before, where there's some softness. And then potentially the rest of the year is supposedly baked in to what all the expectations should be. So it's hard to think what could happen between now and then. But there's a significant amount actually that's about to happen between now and then, especially as we head into November. And just one quick thing, it's not cold yet. It's getting there, but it's not cold yet across North America that much, and especially
Well, tell
across
that to
music.
the leaves in my
I know,
yard.
right?
Tell that
Well,
to the
it's a
leaves in my
slow
yard.
roll, I heard, but so it's not really on our minds yet. But when it gets cold officially, when that first blizzard comes through and the first snowfall in Europe, I think a lot of things kind of change, and a lot of people kind of remember, wow, we got to survive this winter, and we have no idea what energy prices will look like, and that's kind of drastically affect how the consumer, responds to this, because the economy is 70% people spending money.
All right, Akamos, thank you. Did we answer your question, sir? Akaminos.
Yes, perfectly.
Great.
Yeah, exactly.
All right,
Thank
man,
you.
hang in there.
Thank
So
you very much. Have a good day. Thanks for everything you do.
Thank you. Folks, I'm Big Cheds. Find me on Twitter, Big Cheds. Find me on YouTube at Cheds Trading. I'm the author of Trading Wisdom. You can get it on Amazon, but you can also get it for free on my YouTube channel. I'm also a founding analyst at Bitcoin Live. You can check that out in the pinned tweets here on the spaces. There's a lot of information, textbook recommendations. I have with me Big Chonis. He's been trading for a long time, and he and I never agree on anything. So it's good to have him here. Vazja, thank you for being patient. You were really patient. Vazja Kutin, nice to talk to you again.
Hey, hi. Thanks for having me. It's nice to hang around in your spaces.
Good.
I have one kind of psychological question. Did you ever had an issue that it was easier for you while trading? Let's say you lose some of the portfolio trading portfolio, and it's easier for you to get back to even, but it's harder to go above the initial investment into the trading portfolio. You ever faced something like this?
Yeah, I mean that's why support and resistance levels are matter. That's why you have these key levels, because people they buy in at a certain, like, it should hold at 100, right? But it doesn't. And the people who bought it 100 just hang on to it instead of triggering a stop loss. It goes down to 70, and then opportunistic traders buy at 70, and then they sell when it gets back up to 100. They take profit. The people who bought in before are now back to break even. They're like, "Woo, I'm out. I can get out." And that's why you have these levels that form. So you can't, not everybody can make a profitable trade. If everybody who's trading makes a profitable trade, there's no market. Right? You have to have winners and losers. You have to have a disagreement about the price. That's how the market itself functions. And what you're describing is how levels form and why they form, more or less.
Oh, interesting connection.
Yeah, there you go. It's the people.
Yeah.
That's why the people. That's the market. Is the psychology of the market. Like what is a long upper wick on a candle? Think about that, right? That long upper shadow on a candle is just people taking profit. And so everything is just about a representation of what the people are doing and how they're feeling.
Oh, interesting. Thanks.
All right, man. Thanks for stepping up. Did you have anything else for us?
Yeah, if I may, I don't know if it's a personal question for you or not. It's a fact that even though we don't see your face, you are much more credible than many other person. You gain your credibility by your statements. What is the reason not showing the face? Or you are not like to talk about this?
I'm sorry, I lost you after you said my credibility after my statements, and thank you for saying that. But what is it? Why I wear a mask? I mean, just privacy is important to me. It's for me, it's a nice balance. What I do, I'm able to reach people, and when I do videos with the mask, I still can speak through my body. And if you think about how people communicate, like 90%, 90%+ of what we do is body language, and you can't see my face. I get that.
Exactly.
You can't see my face, but you can see my spirit. You can get a sense of my energy.
For sure.
But it feels like the right balance of of a way to do things. And I want it to. I mean, I do want to have my cake and eat it too. I do want to interact with people and reach people, but I do want to be able to, maybe I can shut it off and walk away for a bit. I don't, you have. It's just it makes sense. This is what I'm doing. So that would be my answer.
Yeah. Thanks
Thank you
for everything.
for stepping up today. Thank you.
Yeah. Bye.
All right. Let's see.
I can attest that if you were to see his face, you would think he was actually more credible than the mask wearing. So he actually tones it down by having the mask on.
Okay, that's all right. I'm saving you folks a favor. I'm not a good-looking guy. Crow, what's going on, Crow? Crow Blanco, nice to have you with us today. What's going on, Crow Blanco?
Hey, how's it going, Chad?
Hanging out. It's a beautiful day. How about you?
Good. Haven't slept pretty much all week, so just recovered, getting ready to go have a party. So looking forward to that. But yeah,
treat your body right, man. Find your balance.
Yeah, for sure. Yeah, I've been doing meditation and bilateral stimulation and things like that to help calm me down. So
good, man. Just yeah, I'd say I don't know. I'm lucky I got to this point in my life and in my youth, and it's just to pace yourself is like such a great solution to any problem that you deal with in life. You know what I mean? Moderation and pacing yourself. Like I can't like abstain on stuff that I want to do that I know that's bad for me. So I'll just pace it out.
Yeah, for sure. Yeah, trying to heal some past traumas that are caught up with me. So yeah, learning how to pace myself and all that
I would
stuff.
face it. I would try to face that.
Oh yeah, for sure. Definitely facing it.
Yeah. Good for you.
Yeah. Thank you. My question is really on patience. And so just kind of looking at Bitcoin right now, I've been watching the 4 hour and I'm looking for, a hammer candle at the top of the Bollinger Band or an outside bar. I'm looking for something, but in the meantime, I'm also watching the 1 hour and the 15-minute, and I'm placing trades, trying to catch that bigger move, whether it's going to be upwards or downwards. I feel like it's going to be down. It's going to come down. So, I spend significant amount of time placing trade after trade, and they are all going into profits. I don't take the profits because it's not that bigger move that I'm looking for. But that I get so impatient after placing 3, 4, 5, 6, 7 trades, and it still hasn't moved. And then by the time I'm too impatient to keep trading, I walk away, and a few hours later, the move comes that I was looking for. So yeah, just like maybe emotional regulation, maybe some feedback on that.
Well, it sounds to me there's a couple of things. You said a lot of things there, and thank you for sharing that with us. First of all, trading aside, just first set this aside. We're in a sideways market, which is the hardest environment to trade in. It's not a trending market where you can spot a move against the trend and just play it. Like this is a really hard. This is black diamond. This is the hardest environment. It's sideways. Okay, so just take that and accept that, right? I don't think you're going to catch the big move on a 1 hour chart. It's just not going to happen. So you're over trading in a sideways market, and you sound like you're at least good enough to get some positions into profit, which means you have skill. So you are over applying your skill, right? You are overdoing it. So, but how do we? But the answer though is only a slight adjustment. Like this is the key. You can't like a big ship's not going to turn around quickly. You make a slight adjustment. So, for example, if you have your position, let's just say it's $600 is your position size, right? And you're having trouble managing it. We'll break it up into 3 $200 positions, and then you move 1 or 2 of those stop losses up into profit. Right? Be a little bit more nimble. Perhaps instead of having 7 or 8 open trades, why don't you have 3 or 4 open trades and see how that changes, and start to journal and see which one of those works better for you. So you got to try to make some slight adjustments and see how that works. And that I think would be my advice to you.
I think your expectations are kind of
yes.
This is not easy, and I think your expectations are a little out of whack in the sense that you are looking for something that doesn't happen very often, and the reason that it gives so many false starts before sometimes it actually moves is that's the market doing its thing, making it incredibly tough on both sides. At this point, it's hard to argue that the bulls have won anything in regard to Bitcoin. I mean, there's been some pumps here and there, but stuff is literally still in the same range-ish that's been for months now. So you want to talk about a low liquidity market, trying to scout maybe with some leverage, a decent move, and these things come out of nowhere because there's not a lot of real money playing in this market right now. So this is the hardest times in crypto. How are these sideways moves that will eventually terminate with a much larger volatile event? And I have a feeling the stock market with crypto, those two things will coincide. So don't get frustrated. This is a very hard time, and the reason for that is because there's too few actual dollars and too many eyeballs on this market at the same time, watching and adapting and reacting. And we need more of a comfort to move forward than we have now.
That's really wise words from a veteran trader, Big Jonas. Crow, how's that for our answers for you and your situation?
Yeah, thank you so much. That definitely resonates. Just to touch on what I was feeling as you were speaking, realizing that, yeah, I do have the skill to place the trades, and I almost always have a trade that goes into profits. But I find myself, it's like the 4 hour I'm watching. Yep. Am I going to place a few trades a week, or am I going to place, a few trades a day? And they're all, I'm capable of placing profitable trades no matter what time frame. It's just, am I going to take the small profits on the 1 hour, or am I going to wait for the bigger profits on the 4 hour? And
so
wait
you solve that by multiple positions. That's what you got to do. So you always will have some ability to ride. 2/3 of your stop loss is trigger, but the other one didn't. Now you did catch the move instead of missing it. You know what I mean? That's a simple solution. I think you'll do really well with that adjustment.
Perfect. Thank you so much. That really is helpful. Both Cheds and Jonas. Appreciate you both. Thank you.
Come back next time. Let us know how you're doing. Thank you for hanging out. Let's go to who's next? We'll do roast beef. You are next up.
What's up, brother? How you doing?
Yo, what's good?
Not too much, man. Just a quick question for you. I mean, I'm kind of looking for a little bit further out to make a trade off of a strong rejection off the 233 on the weekly.
230 the what?
The 233 and between the 200 and the 233, I'm looking to set up.
What's a trade. The 233? Is that a moving average?
Yeah, moving average.
I've never heard of it. A 233 day.
Yeah.
So we're talking about Bitcoin.
Yeah.
And on the 4 day on the what? Sorry, go ahead.
4 day and the weekly.
So let's just say weekly. I want to try to understand what you're saying. So you're thinking we're going to break above the 200?
Oh, I think when it hits between the 200 and the 233, two different moving averages.
Would that be around like 24K? Like where would that be? 25K?
Yeah, between 23.5 and 25.
Yeah, I mean, right. So so here's the debate. Like, what's more important, the moving average or the horizontal structure? Right. So the answer there is the horizontal structure. Right. The moving averages are an accompaniment. Okay. They come that is the squire to the knight. Okay. The knight is the price, which is the horizontal zones. So if you're going to look up to that area, you might as well just look to where the last move failed, which is right around 24.7, 25K, and you know exactly where to watch.
Yeah, because I don't think we're getting past that. Because then what would we need our total market cap to be? 1.4, 1.3.
I think that's irrelevant. I don't think that matters. The total market cap. All that matters is the instrument you're trying to trade in front of you, and whether there's enough demand to break through resistance. Okay, and we're talking about Bitcoin. Yeah, you've identified correctly the key levels to watch. I don't know if it will flip, but if we both think it won't flip, if it does flip, then we should go long, right?
Yeah, of course.
Yeah, all right. So then it feels like you're right on track.
And then just a second question as far as like the shit coins pumping.
Yeah.
You think that's just a liquidity grab? I mean, you think that's just people trying to use the narrative of Elon buying Twitter to kind of
Well, I mean, in the case of Doge, definitely.
Don't they usually lag?
Definitely Doge, but there's been other pumps, as well in the last like week or so, and there always are pumps. And I don't know what triggers them. I usually don't care, but there's been a little bit of action here and there in the last like 2 weeks that's not Doge. So.
Oh yeah, sure. But you saw Shiba go and you saw Doggle on Mars go, and I mean,
I don't watch those two. I'll be honest. I don't watch.
I'm looking at the total top 500 coins. Just
I'll take your word for it. It sounds like you're dead on right. I think any opportunity, any opportunity for a good narrative for a pump. I mean, why not? I mean, this is the market we're in, so I'm in favor of it. Whatever it is that triggers the price action, I'm in favor of.
All right,
all right, brother.
Well, I appreciate it. Keep doing a good job, man. I like it.
Hanging out.
You guys both agreed on something that I have a skeptical concern about, which was the break of a certain level, and then we're all in kind of feel.
No, who says all in? No, this is the argument about getting the meat of the move. We don't have to do a whole day. If you think you're going to 50K, whether you enter at 22 or 25,
right,
are both decisions.
I think the fact that Doggy and Shibu and Bibu are pumping is because of where we are in this market. There's still liquidity. A lot of these, and I use air quotes, projects are still worth billions, and they're just nothing. They've always been nothing. So there's money that still can be pulled out of things and moved around and played with, and that's what we have now. That's why these meme coins, the memest of meme coins, right, are actually where some of the money is flowing, because the fundamentals of everything else is crap. That says a lot about this market right now, and that makes me still very bearish and very skeptical of what the deal is. And for those of us that were around the 2018, 2019 bear market, and then subsequent kind of echo bubble move where we went from 3K to 14K, that was another example of money still in the market and able to push certain valuations forward. So still worth $100 billion ish. So that's enough money to make these things move, but nothing has changed. And because the stock market has had a good few weeks, there's a little money to play with. So let's play with some crypto, and that's why we're seeing some moderation. And Bitcoin can still run to 28, 29K and tap the underside of what used to be major support. So that in itself really doesn't change the structure overall, and yet that would be still a very huge move.
That's Big Chonas on Twitter, Big Chonas on YouTube. Couple points of order. If I bring you up, please let me handle the muting. I just had someone kind of unmuting themselves. First of all, that make sure Twitter has access to your microphone. Sometimes it will bug out, and it will seem to me like you're unmuting yourself. But I need you to just wait. Please don't unmute yourself. Also, if I've already spoken to you, I'm going to bring up new guests first. So just to kind of get that out of the way. Crypto Cleve, thanks for being patient. What's going on? Join the conversation.
Yeah, what's going on, guys? So I just have a few things. Well, happy Saturday to both of you guys. Thanks for taking your time as always. But to touch on that last point that you guys just mentioned with all the meme coins pumping, and I know you've hinted on ETH kind of leading during those times, and obviously we've seen that happen typically when we're nearing like a local top in a way. I guess one of my questions would be getting your opinion on ETH on like the low time frame.
Okay.
Because I actually earlier just entered a short on it at 13.
It's still bullish. It's still bullish right now.
Because I'm looking at, and the reason I say that is because I was looking at that 4-hour liquidity level at like, if you go over to the left a little bit,
Yeah.
Pull up my chart back on.
What, September 15th? Those
Exactly.
cluster
Yeah.
of large bodied candles.
Yep. So I noticed that, and currently have some form of like spinning top.
Yeah. True.
I'm also looking at some. I mean, I know you don't look at the RSI on it, so I don't know if
No.
there's something else, but
I mean, I might look at the OBV. I mean, I get what you're saying. Like, I get it. Yeah. I mean, for me, I would wait until it broke below the prior 4H high. You know, like at 1600 or 1590ish. You know the
talking about.
Yeah, I mean, like for me, that's how I would play it. But like, I understand. You see the forming spinning top.
And it's just been a straight move up from 1500 basically.
Here's what I would say, but and I'll address it further what you're asking. But I've just learned through experience, if I'm going to try to short a strong trend, first of all, I'm going against the trend. I know that, right? So if I'm going to try to do that, I kind of need something that is so well defined, like a horizontal break. That's why I'd wait for an up thrust. And that's why I talked about, going below that prior high. Just going in on a spinning top, or even like a gravestone, or just a weird high wave candle. It's like it's a lot harder to define when that idea is wrong. So I like to wait for a sweep below a prior high if I'm gonna fight the trend, and especially if the trend is that strong.
Yeah. So so here's my backing on it. I saw a thrust on that liquidity grab from the September 15th candle. We wicked it. Yeah. We're below it. I have a clean invalidation out that wick high. So if we go back up, I'm out. But
what is that? 1655-ish? Is that your stop loss?
Basically, I did 1660. So I mean, it's a point stop. So it's a tight stop fighting that trend. But
yeah, that's reasonable. That's quite reasonable.
I see the bear div on that RSI, which I personally follow, and it seems to work
out. Mild divergence on the unbalanced volume. It's mild, where you have the flat highs.
Okay. Yeah.
Versus higher high in price. It's a mild divergence.
And then I just look at a straight move up basically from 1500s. We're at a weekend pump, which typically before we had sideways chop the last few months, when we actually had a crypto pump in this downtrend, we basically gave that back at the start of the week. So I was kind of positioning a little bit for that. Not going too aggressive, but like I said, I have a tight stop, so it's very low risk. And
I think it's incredibly reasonable. I think it's incredibly reasonable. I will say this. You know what's missing? If you look at the texture of volume on the 4-hour, if you just pull up the 4-hour chart and we look at the cluster, the volume cluster, like in the last couple of days, right? Starting with those two big volume candles Tuesday, right? And so you kind of, when you're looking at like a consolidating chart, we're dropping to 4-hour, you're always looking at these volume bars. And like, so, like if a flag starts to form, right? But then the red candle has not a lot of volume. It's like a good normal flag, right? Like a normal, volume slowly trailing off. But if those red candles, those counter trend candles have more volume than the green candles, like that's a warning sign. We don't have that like warning sign yet. So like the volume is still bullish. The volume is still bullish. So like on this shooting star candle, it'd be better for your argument, which I think is a pretty good one, but it'd be better if there's volume on it. And kind of a climax capitulate, type of volume. It's just kind of a neat, orderly, consolidating trend right now.
That's fair. And then I was actually looking at the BTC pair as well. I know you mentioned, obviously, I don't think you follow it too much, but
absolutely, I'm looking at it right now because
a clean 4-hour thrust on that.
Yeah, what is it? Up thrust? You said
that thrust candle that you just mentioned. Looking on the USD pair, it just did that on that. 2 4-hour candles ago. Earlier this morning, I guess, depending on time zone.
It's bullish. They're both still bullish. There's no question. But you're attempting to trade them in a really good plan. So that's how I would view it. They're both still bullish, though. You have to give bulls the edge in both of these charts right now.
Yeah. So it kind of a bottom fish, or like a catching a knife on a fade from.
I think the technique is fine. I think there's nothing wrong with what you're doing.
But I appreciate the take. And then my last thing, I won't take up too much time, is I know we were just talking about OBV, but I follow it too much. I probably should keep more track of it, or keep track of it a little bit more. But I've seen some people that use it on Twitter a lot that have a following. And I know you mentioned the bear div that you noticed on Bitcoin with OBV on the daily.
Yeah.
And I've seen them say something completely opposite and seem pretty confident in a bottom. And I know you've interacted with the page. I won't say names, but They seem to be confident that Bitcoin's bottoming, short term at least.
They might be right. I'm not saying that's not. I mean, they might be right. I'm just observing the bear divergence. I mean, I'm observing. It's like if it's raining, and I'm standing in the rain, and I say it's raining, it doesn't mean like I think it's going to be raining tomorrow. I mean, like maybe they're right, but there is a bear divergence with the OBV. I mean, that's a fact.
And yeah, so I just wanted to see. Yeah, I'm not saying you're right or you're wrong or they're right, they're wrong. Like I'm just kind of seeing your observation. Are you drawing that?
Well, right or wrong about what?
The OBV difference. Like,
well, we don't have to judge. It's not like it's not a judgment call. It's an observation, right? Oscillators are calculated based on the candle body close. So when you're drawing divergence, you go candle body to candle body. We have a bearish divergence with the on balance volume from the peak October 4th to the peak now, October 26th, 27th. And even now.
Could it also be argued from the 22K top as well back in September in that cluster?
The 22K top back in September. Now, if you start from the 22K top, there is no divergence. Right? So you have a larger time frame, no divergence, but you have a smaller time frame divergence. So when you're looking at a trend, you observe that it's starting to turn, but maybe it will probably continue, right? That's almost like dropping to a lower time frame. So you have essentially the lower, you have a smaller divergence inside a larger non-divergence, which is correct, but it doesn't erase the fact that there is a divergence from the last peak. So how do we contextualize this? We have a very easy way to contextualize this, okay? If we look at the Bitcoin consolidating structure since June, it formed a triple negative divergence, basically 3 lower highs in the OBV and 3 higher highs in price. So I was thinking about this exact topic because we could very easily make another high, and now we would have a double negative divergence. Maybe we do it again and make a third high in price, and then we have triple negative divergence like we just did August 14th, 15th. So both of those things can be true. It can be true that we have an observed bearish divergence, but we still think it might make another high, right? Because you think about divergence, your best ones are double divergence. Once you get a double divergence, that's why it was so rare that we had a triple negative divergence. I've never seen that in Bitcoin. That's why that was so rare. So it's more likely if we make another high here, and it's unsupported by volume, and you get that second lower low, then you should be very closely looking for a short. And ideally, that would be a bounce up to 22.5, right at the key level. The price starts to stall. We have a negative divergence. We're really looking close for the short, and then we see the price confirm it with an up thrust or with some type of price action. That would be the ideal scenario. So both of these things are likely true. You have to contextualize it. You have to understand what these things mean. It's not, one or the other. Right. I'm not saying they're wrong if they think the price is going up. I'm saying I don't know. I don't know that. But here's what I do know.
Exactly. Yeah.
All right.
Perfect. Well, I had one other point. I'm not going to make it. We've talked for a little while. So, yeah, those are awesome points and awesome considerations. So that's all I got. So I appreciate talking to you again. I've been up here once or twice before. So good talking to you. It's good having you guys talk like this in spaces. I feel like more accounts need to do it. So keep doing it. And you guys enjoy the rest of your day and have a great weekend.
Great topic. It's great to have you, man. It was great to see you again. Let's see. Chris.
Chance.
Go ahead. Yo.
Can I say something?
You always can. Yeah.
So much to say. Yeah. I mean, I think the next step in this process is Bitcoin needs to pump a couple $1,000s. And I think until that happens, I don't have a lot of faith in what we're seeing. As I said earlier, especially with the coins that are pumping currently. And Ethereum has been in this consolidation, high low, lower high, higher low, still forming out. So that's really nothing's changed there too much. As far as I can see, is only like 3 or 4 random coins that have done what crypto tends to do, is all out of nowhere there's a 40, 50, 60, even 100% pumper. We see that all the time, bull and bear. So what can change this is a continuation of stock market bullishness happening in the year, and what's going to happen next week is really kind of
define a lot about, I feel, how that will play out. And if the market takes a bearish turn next week, it's hard for me to see what we've seen in crypto, or what it's hard to see that divergence change where the risk on happens in crypto and risk off happens in, NASDAQ and stock market stocks.
All right, Big Jonas, I'll always love to hear your thoughts. Next up, we have crypto. Actually, sorry, Perry, were you able to fix it? You'll be next after. Just hang in there. Sorry, making sure you're okay. Crypto Wisdom, your turn. What would you like to say?
Hello, Chads. Thanks for having me.
Thank you for coming.
When do you look forward to short Bitcoin and Ethereum? Since currently we know that Fed will again announce interest rates, how can that affect the market?
Those are like three completely different questions. So I'll let Jonas answer the last question about the Fed and interest rates. Where would I be looking to short Bitcoin? At 22.5 area, I'd be looking to both short or long Bitcoin, depending on that price interaction with that area. That's a major area of interest. That's, was the prior attempted lower high. We lost it. That's generally where the price failed on the last relief rally. That's where I'm looking as the next key pivot. That's Bitcoin. Ethereum, 1420, 1430, I'd like to buy there. Just up above, we have a really nice cluster of resistance at the MA 200 and where the last bounce stalled right around, 1800 from the September 10th highs. Jonas, what about the interest rates in the Federal Reserve?
Well, let me answer 1 and 2 as well. The shorting of Bitcoin.
Only do exactly what I say.
The shorting of Bitcoin is what will happen after the Fed does its policy change or continuation. And I refer you to the last time they announced FOMC, and Bitcoin pumped like $700, and then 5 minutes later it was down like 1,000. So, stop out the shorts, give the longs a half a second to make a decision, and then screw both sides and drop. So whatever happens, you have to take the position after the big news event takes place, which sets the continuation of the market. And I think that will be determined by what the Fed does next week. The most important, honestly, the most important number really is unemployment. The Fed cannot stop raising rates until we start to see a rise in unemployment and a rise in people, collecting unemployment benefits, and that will signal, at the first signal, really, that the market is, or that the economy is slowing down, which should have an impact theoretically on inflation, and we're nowhere near that. So I cannot imagine the Fed changes its direction, and therefore they're going to continue raising when every time they announce that, that's when the market takes a crapper. So it's hard for me to see that changing until something major breaks and they're forced to step in, or at least slow down their actions. So don't do anything until the big move happens, because the volatility will stop you out no matter what trade you're in.
Yep.
And then after that, the market will settle enough to show its true direction heading forward. And Novembers have bottomed in recent times. Decembers have been bottomings as well. So I don't know. We're getting close to that very volatile historic time of the year.
All right, Haroon, how was that for your answers, sir?
Yeah, that was great. I'd like to add that since stocks and crypto have most of the time they have correlation, but this time we see stocks bleeding and crypto. Sometimes we see reliefs in rallies in crypto. So
yeah,
don't you think this time is different in the crypto market, or
right.
is it unusual?
Great topic. We'll answer it for you, and we'll move on to the next one. Let me go real quick, Jonas. You may think this time is different, but and you may think there's correlation, but it doesn't matter what you think. You still have to trade within the four corners of the chart in front of you, right? So just focus on that. Sometimes Bitcoin correlates, sometimes it doesn't. All that matters is does price hold support? Does it break resistance? Jonas, go ahead.
Yeah, how do we agree when you're right and the opposite is wrong? If Bitcoin achieves a certain price point, if you traded it properly, then that can be a win. But if it just sets a lower high and then falls back down below 20K again, then so I think it's irrelevant to argue if is the bottom in, and but if you feel the bottom is in, you should be thinking about a more longer term positioning. And if you want to scalp or trade a move, and that's completely different. But if Bitcoin's kind of hit 500,000 or a million in the future, then what difference does it make what's happened the past week from 19.2 to 20,500? That move is irrelevant if you want to play a big picture. But if you're just a trader, then you have to just trade it. And that can be both sides of the coin.
Thank you, Big Jonas. All right, let's keep the conversation flowing. Perry, what would you like to say, Perry?
Hi, guys. My big question is I'm trying to get into the multiple trades, like when you get in, take 2 or 3 at a time. I'm trying to figure out when to time those. Do you buy all 3 at the same time? Do you wait for confirmation on one? Like, what's your...
So there's a couple things here. If we're talking about playing different assets, different charts is different than like multiple positions in the same chart. So one thing I'll try to answer clearly. If you have an idea that the chart's bottoming and you enter the position, next time it breaks another resistance level, you can actually add to your position. You can average up. Right? Most of the people are used to averaging down because they hold on to their losers and they just keep buying them down to zero. Everybody knows how to average down, but you can average up. If the trade continues, it strengthens, the trend strengthens, and it breaks the resistance levels, confirming your thesis, you can average up, you can add to your position. So that would be hopefully answering at least part of your question.
Yeah.
In terms of like, should I also play, if I'm playing Doge, should I also play SHIB, or if you're also asking that, like, should you also play these other ones? Like, you don't have to play every chart. It's like the more you do, the harder it's going to be. So work within your limitations, have a small watch list, really know what your watch list is, and just trade that stuff. I think that's the secret.
Yeah, I'm not really trading any more than 2 at a time, but
Good.
I was really trying to focus on one and figure out. I'm trying to learn on one.
Yeah.
How to start placing my multiple positions, and then
So,
maybe later on I can go to a second one.
There's a couple of things. There's when you start out, there's a lot of ways to do it. Generally, if you're trying to swing into a longer position, you can scale in and buy at one support level, being willing to hold all the way down to the next support level, knowing that you kind of entered lightly the first position. That's like one way to do it. But also another thing is, if you just have a singular trade idea, I'm buying on the retest of $100. You can enter at $100 with 4 positions doing the same thing. And then if it bounces a little bit, you can move half of those stop losses up and keep the other ones lower. So there's a lot of different things you can do. In my opinion, whatever your setup is, if it gives you flexibility, then it's good.
Yeah, like the other day, about that same time you went that ADA trade, I was in it that already.
Good.
And then I was trying to decide, do I go into a second one with a lower stop loss? And
right.
You know what I mean? And then take profit when it went down.
That's always the curse, where you have a trade idea. It turns out to be a good idea. And then you say, wow, I wish I had gone all in before, or whatever, and you're never going to win. Jonas, what do you think about that?
Yeah, I would say don't overcomplicate it. Obviously, you can have an excellent entry, but if you screw up the exit, if you screw up the landing, then your excellent entry is just worthless to begin with. So you can be right and execute it wrong. So if you can focus on that and not overcomplicate, that's achievable. Random stuff will pump, and then money will flow over here, and then will flow over there for this coin. Elon Musk owns Twitter now, and I don't think anybody knows what that's gonna be like. He could really be a tremendous proponent of crypto, and if he decides that Dogecoin
You could change content and how everything's on the table, right?
It's on the table, and he could choose to make the most, stupid decisions that he can say, I'm doing this because I'm Elon Musk, and he can do it. So
and it's private.
It's private for now. So if Dogecoin, he decides that's the currency of the future, you can only imagine what, at least temporarily, could happen. And that's kind of the hedge that's pumping that right
Isn't
now.
that a compelling story, though? Isn't that a really compelling story? Doesn't that almost make you want to forego your risk management practices? Like, it's such a good story.
Well, that's where, it's one of those things you hear when someone's behind something. Like when Buffett disclosed he was a huge investor of Apple, many years ago. Like, that was a big change to how people saw Apple. Dogecoin would be doggy shit if Elon hadn't, chosen it as the one. And Shibu was bigger shit and just had the right moment to do its thing. So I think the overall market hasn't changed, and I think even if you want to believe the bottom is in, this will take time. And I said this time and time again, we will not know that the true bottom for this cycle, or in between happenings, I guess you could say, is the true one, and for probably a year after it's actually happened. I still firmly believe that. So if the lows of whatever June were the lows, we won't know at least till 6-8 months from now, I think. And that's really where we can truly analyze what has happened and say, yes, you were right. This was the greatest time in history to reaccumulate stuff that was huge money for huge discount to where its previous all-time high was, or that will proven to be what it's been, just another trap.
Thank you, Big Jonas. Yeah. And Perry, thank you for your question.
Thanks.
Take care, buddy. Thank you so much. Plan B, you've been very patient. Plan B, thank you so much. What would you like to say, Plan B? And I'll give you just a moment. Hey, what's going on?
Yeah, not much. First of all, sorry for keep muting myself before. It's just my
Not
first...
you. It wasn't you. It was you're good. It was actually Perry, but he redeemed him, so we're good.
It's just first time I'm requesting to speak on this Twitter space.
I'm glad you did. I'm really glad you did. And people listening, I encourage you to do this because you don't want to just hear me talk to myself. I mean, that's what my YouTube channel's for. So what's going on?
So, Chet, could you please give us your thoughts on BTC on the weekly chart?
On the weekly chart, yeah. I mean, it's bearish. It's an incredibly glim. Is that the right word? Glib.
Right. Can you hear me?
I think we lost Chad's. I still hear you, buddy. Let's wait till Chad's reconnects.
Right. Sorry, just finishing my question is where on the weekly chart where the Bollinger Bands are starting to pinch big time.
That's the thing that happens when we go sideways for so long. Price and time are the things that can really truly change that trend. What is compelling is that on the higher time frame, like the weekly chart, we're seeing the tightening and the of not just the Bollingers, but other oscillators, other indicators. And normally when we get this kind of tightening, we then get a huge expansion. So the initial moves of what's going to happen next will be a lot of convulsion all over the map. There'll be spikes up, there'll be spikes down. It's going to be a lot of trying to get a lot of the big leverage, short-term leverage, kind of squeeze that out of the market before the real move actually takes place. But when the real move begins to get momentum, it's going to be pretty quite obvious as to how we want to kind of end up this year here.
Thank you.
And I think that's going to...
Sorry. Please finish. My apologies.
So what I'll be looking for, kind of heading into the next few months, I mean, we've mapped out, what's even if Bitcoin puts in a lower low, still nothing has changed. Even if Bitcoin pumps to 26, still nothing has changed. The real catalyst that can really move this market is to hold a weekly close over 30K at least, right? Or to start putting in weekly closes below, 15, 16. That would be kind of the official, wow, we've failed to hold support here, and now the market feels it's valued here, or we've had enough time down here, we've now been able to pump above here, and the market has decided to hold it over a long enough time period. And because of that vast price range of noise, Bitcoin can do these things and still not really overly change the market. And right now, the pain trade might be up because of that availability to move forward as stocks can cooperate, only to basically allow more, in my opinion, more exits, liquidations of a lot of these crabby projects and scams to begin with.
Bollinger Bands are finally catching up in the weekly, right? I mean, that kind of sets the stage, for what's to come, because this is kind of a ridiculous period of sideways. But and again, thank you for handling that. I had a call. Thank you, Jonas. We have the Bollingers pinch, starting to pinch a little bit, but what next? All right, but all the moving averages are still headed down. We're still below the 200, which is still rising, but at the lowest angle ever. So the 200 has never been this weak. We've never spent this much time in history below the MA 200. So we, in many instances in the weekly chart, we're looking at a damaged, a bent, but not a broken trend, severely bent, I think, at this point. And you have the price below the moving averages. We have an inability for the price to close above the EMA 8, having only done that 3 times since November. It may do it now, but it's actually not as big a signal because we're in a sideways market now. So moving averages are starting to become less important. We have a clear horizontal flip level, 25.5 in the weekly chart. You see where a low was lost and became resistance. So that's easy to mark out. If you want to go long, you see where you would go long based on simple horizontal strategies. And at that point, you'd be above the MA 200 as well. So I think there's no real risk of missing the whole move, missing a big part of the move if you just played based on that simple strategy. But, that's your bull case. The bear case is just, hey, we're in a downtrend. We're still consolidating after a big move down. Bollingers are getting tight. We're probably going to continue down. So that's my thought on that. Thanks for the question, Plan B. Appreciate your patience.
Well, yeah, no worries, Chad. Not trying to get you a wild prediction or anything.
No, not at all. This is just how we kind of view things, and we all approach it kind of in a different way.
Yeah, it just seems like they are pinching out just like they were doing at the end of the last bear market on
the end of the last bear market when
April 2019.
Okay. So yeah, I mean, sure. Right. But what? Right. But we were above the 200 at that point. We were above like all prior all-time highs. We're kind of at sometimes below the prior all-time high. It's different. And this is the danger of thinking that we're going to always do what we've done in the past. You have to recognize the weakening trend here on the weekly chart. You have to recognize that. All right. And if that idea is wrong, if it's not weak, you know where you're wrong. It's a very easy way to look at it. I mean, you're wrong if you're back up above the 200, and it's certainly above 25.5. So you don't have to have a complicated approach here. All right.
Right. Yeah.
Right, brother.
Sure.
Thank you so much.
Thank you.
Thank you for stepping up. Sorry about that. And thank you as well. Level 10 noob. What's going on, bud? Good to see you around there.
Hey, Chad. Hi, Big Jonas. How are you doing? Can you hear me?
Yes, my friend. What's going on?
Yeah. Nothing much. Just a regular Saturday evening in Germany. So
good. Good in talk.
Yeah, hello. And so basically, just to start, so the last FOMC meeting, we had a pretty, let's say, sharp drop. I mean, it dropped from 22.5 and it bottomed somewhere at 18.5 right after a couple of days, I think, until September 19th or something. So that's basically a 4,000 dollar range, right, on Bitcoin when it dropped. And I think right now we just let's say we probably get also a drop on this FOMC because everyone will be like, yeah, that's crazy. But if there's no surprises, I could think like in percentage wise we could see something similar, and now we just see a technical. So the question is really, if we are, I think it's very much options related, right? Because it trades like a high beta version to the SPX or whatnot, right? And these option sellers, they have to hedge, right? Because if this goes out of whack too much, they're going bankrupt basically, right? I mean, they pay so much money. So I think that they need to see this can just move so much, and then they have to start buying just to not keep the market from dropping out, right?
Sure.
And the question really is, so if we see that, I think, or let's say, would you say that this kind of range, like even if we go below like 17.5 or something, I think it won't go much further down, and most of the time people overtrade, right? And I think it's very easy to just burn your money on trading in and out of the things and just buying the tops and selling the bottoms, especially if you're not every day there. So the first question is, do you think this would be a reasonable place commonly to buy? We could say, okay, you still have to live with it drops to 12K for a couple of weeks, but that's it. That's the first question. And I mean, for let's say not a guy that has the time to really look at the charts all the time, right? Because there's people like that in here.
Let's separate that. I want to just address the first question first.
Yeah.
So I don't understand. Like, if you buy at 17K,
yes,
like you don't hold at 12K, you're out at like 16.5. I mean, like, so if you're trying to hodl, then you don't really care where you buy. But if you're trading, that's not a trade. There's no trade. I can imagine where I'm going to buy at 17K and then 12. I mean, that just makes no sense. So if you're just buying and you don't care, then buy anywhere. And the bottom of a support range is, not the worst. It's fine if that's your whole thing. But the support range might break. So in that case, is it a trade? Are you managing your risk? Are you saying I bought here because I thought support would hold, but now support broke, so I'm out, and then I'll reassess if we get to 14K, if we get to 12K? I think you have to be more agile than
right. So right now my question really is, because I was referring to these options, is basically because we can't at a single leg drop too much of it's just not possible. I would say Bitcoin is already too big to move that much, right? I mean, the stock market would have to collapse. Okay,
brother, though. I don't know, my friend. We've seen exchanges go down. We've seen a lot of weird stuff throughout the years. Jonas, can you jump in on this? I think it's a great topic.
It is a great topic. I mean, I think the hardest trade is probably the most likely. And I think in crypto, we are trained to react to a big red candle because we've seen them on several occasions, something that just bottom drops out. You look across the board and, Bitcoin, Ethereum, everything's down between 15 and up to 25% on a daily candle. But those events, in many circumstances, have been capitulation moves or close enough to it, where the next candle or two after that, you've seen that big lower wick form and buyers begin to step in and find a base. And that kind of move, I think we're trained to look for. What would be harder than that move, or more, I think, frustrating, honestly, for both sides, is a slow grind lower, where we do break the 17.5 bottom that we have currently, touch the 16s in some way, find a bounce back to 19 or even 20, and then the market gets really excited again, and then you kind of lose that and grind lower. There is a reason why you can look on a chart and say, well, Willie, there's nothing, that's rock firm foundation until basically the 10 to 12K range. There's so much history there, and that's kind of the next area that can fall. But there is also history, around 14K, and there's a big jump between, 17 to 14 to 12. But at that point, really, what's the difference? If that does mark the bottom, then it will eventually be over 20K again anyway. So I think the pain train is longer and grindier. And that's what I think we might end up seeing through a big portion of 2023. I just don't see how we can be in a risk-on atmosphere, especially through this winter with the unknowns about how much things will actually cost.
There you go.
Yeah,
How's that for an answer?
It's very likely. I mean, unless someone starts printing money like crazy, we probably don't see anything happening even in the stock market. It's just a slow grind down. It's like everyone's getting bored and doing something else in the end of the day.
I think yes, but also it doesn't mean that there can't be charts we can ride, even bull charts. You know, there's relative strength. There still are.
Of course,
charts.
there's always opportunity.
Yeah, so I
completely
think
right.
not that you're wrong, but I just want to make sure that you're not gonna shut your eye to opportunity.
Yeah, definitely will.
Good.
Okay.
Good. Thank you so much.
Thanks.
All right. Let's go. Let's get Cardinal, my good buddy Cardinal. What is up? Nice to see you as well. Hopefully your trade, the Euro trade, is going well. What's going on?
I don't have one. I don't have any Euro trade currently.
No.
Although I'm trying to. You said?
Okay.
Yeah, but I want you to take a look at ADA just now. Look at 4H and the weekly. 4H
You want
first.
4H and weekly, you said?
Yeah, 4H then weekly.
I got 8 on the 4 hour. What do we think on the 4 hour? Oh, interesting. Ooh, okay, yeah, you're looking to short here.
I'm already short.
Yeah, well, I mean, this is a spot to start to take one potentially with the idea of an upthrust, but you're wrong. Back up above 42.3 or whatever. So what's up?
I already put my stops already at break even.
Yeah, I mean, yeah, by the way, this guy's a good trader. You can tell he knows what he's doing. So that's my thoughts.
I am nowhere near good, by the way. Don't mind him, please. What was I going to say? Yeah, look at the weekly also.
All right. I mean, but let's before we move on from the 4 hour, it still could very well resume this uptrend here. It's still up in the air, and I think you know that, which is why you moved your stop loss down.
Yeah, because the market is really crazy right now, just moving up and down.
Oh, weekly chart is just trash, bro.
Yeah, I know that there's that clean support. There was that clean SR at the
low 40s,
0.4 level.
Yeah, exactly. The low 40s support. Yeah, exactly.
And we broke below 0.4 like last 2 weeks.
This is arguably what's called a pullback or a bearish underside retest.
Exactly. And a great trader once said, if you have a chance between a reversal and continuation, you go with the continuation, right?
Every time.
Exactly. So now I'm trying to short the EMA rejection on the weekly. That's what I'm trying to do.
Good. I think you have a good approach, and I hope you do well.
Yeah, thanks, man.
All right, brother. Thank you for stepping up. All right. I don't usually do this chart, Striker, but again, I try to just bring people up once. If you want to just very briefly, what did you want to say? And then we'll get the last two guests up here. What would you like to say?
Ed. Excuse me for taking space in your space again. But like I said, you're credible when it comes to candlesticks as well. Like I haven't seen anybody else that can like challenge me and make me, learn a thing or two. Besides the master, the guy who translated Japanese candlesticks to Eastern, world. You said something about a doji last time when I said that it could be a shooting star. So my question is, I've studied like the classes, like I said last time, and he does say something about those being a type, like a family of a shooting star. Now I know
So there's a
classical
couple things. Go ahead. Finish your question. Go ahead.
Sorry, okay. So I know the classical shooting star, an example is like the one we had at 12 p.m. on Ethereum hourly chart. But the one we had, for example, in Doge's hourly, like what is it because of the little wick down you call it like a doji instead, or are you flexible with
which
those?
one? Doge hourly?
Yeah, Doge hourly. I think it was before the candle, like before the prior candle.
Yeah, that's fine. That's a shooting star.
It is a shooting star, yeah? Okay,
So
then I got
there's three things. Let me get through these. So first of all, there's a category in candlesticks called stars. So a star is both a doji or a spinning top, right? It's a small-bodied candle. It's called a star, and you can look for a pattern called a tri-star reversal. If you think about like an abandoned baby gap down, doji, gap up, right? That's a single star. And there was something I was trading called TLT, and TLT had dual star, it had two stars. It was two spinning tops. So a star is a small body. That's like the broader family. And then you go to a spinning top. A spinning top can be a lot of things. People think of like a hammer. That's a spinning top. I'm going to mute you real quick. There's a little background noise. A hammer can be a spinning top. But also just a regular spinning top, that what most people think of is with an equal upper and lower shadow. That's also a spinning top. So any small-bodied candle, essentially regardless of what the wick is doing, that's a spinning top. Okay, a doji is essentially a similar open and close, and you should have no more than 5% of the daily candle range as a body. If it's bigger than that, it becomes a spinning top. Now, there's a little bit of a judgment call, obviously, with some of these things. So sometimes you can call a doji a spinning top and a spinning top a doji. But generally speaking, most of the time, that's things people get confused a lot. Like they call something that's clearly a spinning top, they call it a doji when it's not, right? If it's got a body, you can clearly see it's a body. That's not a doji. So those are the categories. Those are the classifications. That's number one. Point number two, and point number three is on the Doge 1 hour candle in question. Right, you rarely have what's called shaven bottom or shaven top. That means like there's a candle called a Marubozu, which is a full, like it opens in the bottom and it closes at the top. It's pure green or pure red if you do it in reverse with no wicks, right? And that's it's called shaven bottom, shaven top, right? No wick. So, on this candle, you have a little lower wick. Well, is it no longer a shooting star? No, it's basically still a shooting star, even with a really small wick. If it gets any bit longer than that, then it's really not a shooting star. It's just a spinning top. It's just a small-bodied candle. And then you're looking at the texture. You're looking at the size of the wicks, the upper versus the lower, and the size of the wicks in relation to the body. So you're doing all that momentum analysis. And that's how I would answer that question. All right?
Thank you, Chet, and sorry for the noise. I was freezing outside. I stepped up because I'm with a bunch of people. That's why I sounded like I was FOMOing earlier. And thank you. Like, I just wanted to, because I appreciate your thoughts, and I
Thank you.
realize you're very experienced when it comes to candlesticks as well. So luckily we have somebody else we can brainstorm with. And thank you for having me again. I appreciate it a lot.
Thank you so much. Thank you for stepping up, Jonas. I see you did want to speak on that subject. What's going on, bud?
Yeah, just the psychology behind the formation of the candle, right? I think we talk about the candle and the shapes, but I think it's also interesting to talk about what the market psychology is that form them, and we talk about the star candle, the doji, that can take different shapes, but overall it's a very tight body, and the wicks can be really any meaningful length on either side. And I think that is basically a battle, right, between the market trying to decide where this should be, and after that specific time frame, it's a draw, and that's very interesting. And you have to then analyze that candle formation in the context of the previous ones and say, all right, is this a battle that's about to reverse in direction, or is this a battle that's a continuation? And the follow-up of that doji star is really what tends to set the line, where there was a battle of attrition and it's a stalemate, and then but one side's a little weaker, and then you just see the gates open up, and that's very interesting. And that's why trying to identify those particular candlestick patterns is so important and so useful in technical trading.
That's big, Jonas. It's funny. They talk about the gravestone doji. It's like, why is it a gravestone doji? It's like that's the hill upon which the bulls died, and like the doji marks their grave. I mean, it's like ridiculous.
I would argue the only day that you can use that term is Monday, right? Halloween. Yeah.
Thank you, big Jonas. Pharaoh. We'll get you up next, Pharaoh. What's going on? Pharaoh, what's up, brother?
Hey, everybody. Just got really randomly here in the space.
Okay.
You guys are sharing pretty nice wisdom macro stuff. Actually, it's not a question. Actually, I'm asking for advice on your side. Is I started trading for a Swiss company, 100K in August, and I'm now up to 7.5, so made about 7.5K. And like my strategy is like I'm not like really the candlestick guy or using like big data. I'm just kind of trading when I see, some price action going on. And basically what I'm doing is I'm never going like leverage. I'm using like 30 or 40% when I open a contract and close it with, let's say, 1% or around 1% in profit. Yeah, just curious what you
Good. Well, I'm happy
advise me.
you're doing well. What can we? Is there any questions we can answer for you? I mean, I'm glad there's so many different ways to trade. It sounds like you're finding a way that works for you.
Kind of, yeah.
And I would say my advice would be to continue in that direction. You have to kind of find the right style of trading that fits your lifestyle, how much attention you can put into it, your risk threshold, how good you are, how quick you are, how much experience you have, how much you can afford to risk, all that stuff. Find your style. Try not to get too influenced by those other styles. I think you should really get comfortable with your style, especially if it's successful.
Yeah, I mean,
All right.
like using the style because I don't use any stops, so
That's like you, Big Jonas, right? No stops. They call you the no stop Sandy.
Jesus take the wheel, right? Just go
That's
full
it.
100x and Jesus take the wheel. No, I just want to say this thing about that. And it's great. You got to find your own style, right? There are times where you think you know what you're doing as a trader and the market humbles you. But time allows you to absorb a lot of these variables that different markets, take shape. And the longer you do this, the more time and effort you put into it, you'll get better at different phases of the market. This market changes, it adapts. It's not like it was a year ago, a year and a half ago, 2 years ago. So I think about being nimble, but sticking to your rules. And there'll be a point where you'll decide to use stop losses at some point in the future.
Thank you so much, Pharaoh. Thank you for stepping up.
Thank you so much. And really nice. I appreciate your words.
Appreciate you, buddy. Thank you so much. I want to just remind people I'm Big Cheds. On Twitter at Big Cheds, on YouTube at Cheds Trading. That's Big Jonas on YouTube at Jonas Trading. If you look at the top of the spaces, there's some tweets up there I want to draw your attention to. One of them is kind of my longer time frame thesis on Bitcoin, why I thought we would be down here, below 20K back in March, April. The second one is linked to my book. The third one is linked to YouTube, where you get like a lot of great free resources. You definitely want to go. There's the masterclass webinars playlist. You have to start with that. You really should watch those videos before you trade at all. It's a great way to start. You need that foundational knowledge. This is the Twitter Spaces. And by the way, if you're listening on replay, I'm hanging out with you in the chat room. I upload all of these to YouTube. So there's 17 other Spaces conversations you can go listen to right now. And they're just great questions from people, regular traders. Check out the rest of that stuff on YouTube, my long form interview series, and the free version of my book, Trading Wisdom. Make sure you check that out. It's available on Amazon. I also have linked at the top of the spaces my textbook recommendations. If you're someone who really wants to learn, it's a great way to do it. Every time, for me, every time I've blown up a trading account, I went and I read another textbook, and I said I need to come back with some new skills before I try again. So check out those textbooks. And then, of course, the last one is a link to a video I did in May. It's a full market report from Bitcoin Live. It's one of my twice a week, I do a full market update at Bitcoin Live. And so this is the link to one of my full market updates. You can kind of see what it's all about, what Bitcoin Live is. I'm a founding analyst. I think it's a world-class team, and I'm proud to be part of it. So check that out. Thank you for listening. And next up is Smash Main. Good to see you, bud. What is going on?
Thanks for having me on, Chads. Hello, Jonas. Again, great to be on. I just wanted to point something out. It's maybe not to the frequency of many traders here, but if we look at the 6-month chart on both the NASDAQ and Bitcoin, we're hovering right over the 9-day moving average. Now, those are two absurd, those two, I guess a 6-month chart overlaid on top of that moving average is a little bit absurd. But if you look at the overall trend, we're still holding an uptrend, and we're hovering right over that moving average. We touched it, we wicked below it. But for those debating whether we're in a secular bear, right, in a macro bull, there's still an argument to be made that we're in an uptrend. At least, for the next little while. I know people are calling for an extended bear. And then depending on where you sort of stand, that'll kind of inform your big picture trading strategy. But I just wanted to point those two charts out.
So Smash Main, aren't we all, and you're right with what you're saying, but aren't we all trading in different time frames, right? Because we all have
Yes.
different horizons. So that's where like it gets messy. Right. That's where it gets messy. I could say it's incredibly bullish, and there might be a really good high frequency trader who's trading like a 15-minute chart short that I'm not even looking at because it's just like a weird move or whatever. So we all kind of, you're right. I mean, the long, especially with like a secular bull market, that means you can step out to a yearly chart. It's going to be bullish. I mean, that's not, that's easy argument to make. So we're all in different time frames. Jonas, what do you got on this topic? I think it's a good one.
Yeah, I mean, I think the time frame thing is interesting, and it's hard to convince somebody that if you look at a longer term perspective, everything's fine, but my portfolio is down 30%. Like, what are you talking about? But you're right. We go out farther in time. Look at the big picture. Look at this enormous, 30-year bull run.
Yeah.
I mean, 1982 to, basically like 6 months ago, even with the crash, GFC and the dot-com crash and the taper tantrum and then COVID, all those mega crashes, and we kept ripping higher. So there's still so much upness. There's still so much long-term profit still on the books, if you will, there. So that's two things. Yes, the market can still move higher, and it still can go a lot lower, really, without creating too much more damage structurally, but not that much lower. But lower. I think the Dow can still go to 25,000, and the Nasdaq can still go to 8,000 or 7,500. Long term, we're still putting in that higher low. We're still holding the highs of the 2000.com and Nasdaq, anything over $5,500 or 5,500 points, but that will still take Nasdaq another 40% haircut. But then you think about the valuations of Apple and Microsoft and Amazon still after these pullbacks, and they're still in the trillions. So what are we talking about here about true value? And I think the Fed will continue to do what it's doing, and I think over time this will continue to play out as it's been. And they always say during bear markets you get the most vicious face ripping rallies you've ever seen. Some of the biggest days in stock market history are during the time of the major crashes. So it's still very subjective to say, if this has been a lot of pain or not. Short term, absolutely. Long term, it's a blip. And if you've been an investor in things like, I don't know, McDonald's, United Healthcare, the defense contractors, ExxonMobil,
Truth Social,
you're having a great year. So it's to each his own. Not everything is having a bad year. Some things are more than others, but overall, there's definitely been some huge winning trades out there.
Another thing.
What do you got?
That's it. Go ahead.
I just wanted to say one other thing for those, in case none of you have looked at this. The Nasdaq to S&P ratio chart is pretty gnarly. Like, we're sitting on the highs, and we're holding pretty much the highs of the Y2K bubble, which just like is so damn bullish. I don't even know how to put it into words, but it looks really sweet. If nobody's looked at that chart, I encourage everybody to look at it. It just, for the bulls out there, it's one of those it's just one of those things that.
So look, yes, if longer term the trend is towards tech, sure, but there could be smaller intervals within that where it's different segments in the market as well. So I think like now we're back to like what time frame you're on. You know what I mean?
Yep.
All right.
And there's still just a lot of money out there, So yes, a lot's changed, and yes, there's stocks like the fake meat and the cars companies and stuff that are down huge.
Yep.
The SPACs,
the iPad on the bicycle.
right. But that being said, the U.S. still has some of the most wealthiest companies in the world, and the money wants to be here. We have the most stable economy in the world still, and as long as everybody else is weaker,
best schools.
Yeah, I mean, as long as everything else is weaker than us, emerging markets are going to be struggling to find investments the way that the U.S. Economy always has.
Thank you, Smash Bros. We're going to move on. I'm glad Smash Bash. Thanks for stepping up, man. All right.
Thanks, guys. Thanks for having me on again.
Stay good. We're going to wrap it up with the last couple of guests. This will go on forever. Trading, Tobias. What's up, man?
Hi, man. I'm still from Germany.
Good.
Nice.
Welcome.
Nice hearing from you.
Thank
you.
you.
I was wondering if
Danke.
you bitte, if you're shorting the M pattern on the 4-hour.
For what?
For Bitcoin.
No, I'm not shorting here. I'm not trading here. There's no trade here for me. There's no trade here. I mean, I think I've been pretty clear. I feel like but I don't. I say a lot of stuff. I mean, I'm not really trading unless we're at like around 22.5, or like 18K. I'm just not trading in between. This isn't like a historic side market, absent volatility. All moving averages are sideways. Most of my techniques, the tools that you learn, they just don't work in this type of market. It's pure sideways. What are you going to do? So I just got to wait for a larger move, and then I'll apply my risk.
Okay, got you.
Right. Yeah.
And for example, if we break like 24,000 or around 24,000,
it's not an important level. 24 is not important.
Is it not an important level? Because
22.5 and 25 to 25.5 are the two levels to watch. Right.
Okay,
Look at where the last relief rally stalled. That's arguably the most important level. I mean, that's the easiest one to draw. Where the last move stalled, you start there. Right. 24K would be below that. So that's fine, but you're anticipating the move is going to stall before it's even gotten there. I mean, I think it would be reasonable to expect it to at least test. If it breaks 22.5 and it flips that level, which is very important, based on the highs and the lows of the chart, the attempted higher low that it lost, if it breaks, to 20, it's clear to me, at least the way I do this. All right.
Okay. So, and are you not
yes.
I don't know. I thought I just look at the higher time frames and then I
yes.
draw my resistance and support lines. And like you said, 22.5, right?
Yeah.
22.5.
It's good. If we all drew the same levels, there would be no market. There would be no market. And just, I'm okay with that. If we have different levels.
Yeah.
All right.
Okay. Well, thank you. And then I would say I let the other people talk as well. Okay. Have a good one, guys.
Thanks a lot. Appreciate it. Listen, I'm thinking about the election is also something that we have to keep in mind because that's in 2 weeks. And I think a lot of pent-up anxiety is kind of building, which side wins and how that could affect the market, or at least the narrative about how that could affect the market. So I think a lot of people are waiting kind of on the sidelines. Remember what happened on election eve and then the morning of 2016. I remember the market was down 1,000, and then went up 1,000 at the end of the close. So the narrative about what will happen if this side wins or that side wins is just a narrative. But the facts will actually be apparent in 2 weeks when that's over.
and that'll be really interesting to see how that plays out, because whatever direction that tends, will really set the stage for the rest of the year. And a lot of it's going to set the stage for how everybody wants to kind of wrap up their books, which is starting now.
All right, that's Big Jonas. Thank you for the question, Tobias. It's good to talk to you. Hope you're doing well. All right, and we'll talk to you soon, Tobias. Thank you so much. We're going to move on. We have one last guest, and that will be it. So this has been a great Spaces. Shoaib Zada. Shoaib Mohammed Zada. I apologize for mispronouncing your name. What is up?
Hello. No, it was all right that you've pronounced my name right. Hi, I hope you're doing well. I'm also from Germany.
Oh,
my
guten
question
Tag.
is Guten Tag. My question is actually about Dogecoin. Do you think it will go further up in the next days and hours? And if a stop limit order, for example, on Binance makes sense overnight, for example, that it sells it at
Okay.
an order or not?
So are you talking about like a profit-taking order?
A stop limit order, for example.
To what? To sell stop limit what? Like
yeah,
a
yeah,
buyer?
to sell it.
That's
for
fine. Yeah, and there's never. Yeah, absolutely. Yeah, set a profits thing for overnight. Look, what do I think? I think it's incredibly bullish right now. I think it's incredibly unpredictable right now. It's not pumping with the rest of the market, so it's a lot. It's very unreliable. I think it's dangerous. It's higher beta. If that's what you want, if you want more wilder swings and unpredictable moves, this is a good one for you. It's got something. It's got mojo. I think it's hard for me to really. I'm not going to call a top in it early in this one. I'm going to really let it play out. Is what I'm trying to say. I'm going to give it a little bit of room, if that makes sense.
Yes, sure. Yeah, that was
All right.
actually my question. Thank you very, and
Thank
have a
you so
great
much.
night.
I'm so glad you stepped up. Thank you. Big Jonas, well, how would you like to wrap it up? It's just been an honor. It's been fun just having you around. It makes it a lot easier, my job a lot easier. What would you like to say to wrap things up today?
I think we're in a time where anything can happen, and I think we've never been more susceptible and yet potentially on the cusp of something truly unique. And I think all we have to do is be patient and be, practicing the risk management we talk about. This is a very hard market to navigate. I feel like I've heard a lot of frustration, a lot of the people talking, and but I feel a lot of optimism that there's a lot of people that want to learn and better themselves, and there's no better time to do that when you're in a very tough and frustrating market, to hone those skills and to prepare yourself for better opportunities in the future. This is hard for even the pros. A lot of the pros have been very wrong about what they expected to happen this year. So as we close out the year and look forward to 2023, we still have a few months to really end it on a very strong and positive note. So I'm optimistic, and I believe and I hope that you guys are optimistic as well. And just thanks for listening. I appreciate the invite.
Where can we find out more about you, Big Jonas?
Probably in a book. I'm in. I'm here and there. On Twitter, obviously, but I might not be. I might decide to move to Truth. No, I just think that it's interesting that I don't think we've taken for granted what Twitter has been over our lifetime on it, and I think we cannot ignore the potential that a lot of that could change. There's so much unknown
paradigm shift
about what Elon is going to do with this platform, and my hope is he improves it. Right, my hope is he makes it better. But who the heck knows? This guy is many things.
Yeah. I'll say I know one thing. You make these Spaces conversations better, Big Jonas. Longtime trader, longtime friend. Thank you for stepping up. It's been great. So look, I'm Big Cheds. You heard it all before. I'm a Big Cheds on Twitter. Check me out on YouTube, Cheds Trading. You definitely want to check out Bitcoin Live. Take your trading to the next level. If you're listening to this on the replay, it's probably 2-3 days later. We're hanging out in the chat room. Thank you for hanging out and watching the replay. I hope everybody has a wonderful day, and I will talk to you soon. Big Cheds out. I love these spaces. Like just listening, it's like, maybe I want to do another one. But you know what? They take so much out of me. I mean, these are like I've no random questions, and I try to give it my all. And you go for several hours, and so I have to be. It's like like you're like an artist creating something. It takes your mojo. So I'd love to do another one, but we'll see. I'll try to do one soon. Anyway, thanks for hanging out, folks. I hope everybody is doing well, and I will talk to you soon. Big Cheds out.